you all fellow chartered accountants and my dear students. We welcome you all to this virtual seminar today on tax audits and legal cases surrounding the relevant sections. Today we have the pleasure of having ACIT Range 1 Mysore, Mr. Additional CIT, Mr. Girisha, who will be addressing us in a few minutes. Before that, I request our members join us for the CA Motor Song.
Shashank Bapal.
Sir, you can start, sir. Raghunath, sir.
Thank you, one and all. May I now request our past chairman, Mr. Vasudev Rao, to introduce to you our chief guest for the day.
Good morning, everybody. Today I have the privilege of introducing the chief guest, Sri Girisha K. He did his science degree, that is BSc from St. Joseph College, Bangalore in 1984. And also he did his LLB from Vidyodaya Law College, Tumkur in the year 2000. And he joined the department on 9th of November 1988 as inspector, and he has served in various capacities and presently serving as Additional Commissioner of Income Tax, Range 1 Mysore. And Mr. Girish is not a new face to Mysore branch. He has blessed many occasions of Mysore branch programs. Now, I request members to welcome Sri Girish to this program. Thank you.
I now request Additional CIT Mr. Girisha to address the gathering.
Respected members of ACAI, Speaker of the Day, Mr. Kapil Goel. It's indeed an honor to me to address you on this for this CPE program. I'm really honored to be the chief guest here. Mysore CS are very familiar to me. They consider me as one among them. So do I. Now you have chosen a very relevant subject for this CP program, litigations in tax audit. This is relevant because on account of this globalization, then opening up of the economy, then changes in the tax laws in financial sector, banking, all these have taken place, and relevance of tax audit is very much in focus now. The traditional system of auditing is, if it is continued, whether it is relevant for the present changes, how it will serve the purpose. This aspect has to be really looked into, and one has to consider with otherwise the professional approach of your entire profession will be put to test. So therefore, you have selected a very able speaker, Mr. Kapil Goel, who is both LLB and also chartered accountant by profession, and who has got the access to Supreme Court cases and also all the CBDT and all these higher echelons of our tax system itself. So I deem it as my privilege to inaugurate this seminar. Thank you very much.
Thank you very much, Mr. Girisha, for inspiring. Pradeep, we can now introduce the speaker of the day.
Thank you, sir. Now I request C. Narendra, sir, from Shivamogga CP chapter, the convener of CP chapter, to introduce the today's
Pradeep, I
speaker,
think you're
C.
on
Kapil
mute.
Goel.
Pradeep, I think you're on mute.
No.
Oh, yeah, please go ahead.
Narendra, sir.
Yeah, please go ahead. You can go ahead, Pradeep.
Narendra, sir.
Yeah, thank you. Good morning, everyone. It's my privilege to introduce one of the eminent faculty for today's webinar. Mr. Goel is a bachelor from Delhi University in 2003. He is also a law graduate from Meerut University. He is our fellow member of Institute of Chartered Accountants of ICA. At present, he is a practicing advocate at Delhi High Court. His expertise lies in direct tax litigation. He presented more than 1,000 cases at appellate authorities, including ITAT and High Court level. He is a member of Direct Tax Representation Committee in All India Federation of Direct Taxes Practitioners for interaction with CBDT and Minister of Finance. He is awarded as Best Speaker in Northern Region of Council of ICI in 2011 as well as 2015. He is designated as faculty for International Taxation Certificate course being conducted by the Committee of International Taxation of ICI. He is also nominated as a co-opted member of Committee of International Taxation for the year 2020 and 21 by the ICI. So with this, I present before you the eminent faculty, Mr. Kapil Goel.
Thank you, Narendra ji. I am audible?
Thank you, sir. Over to you, sir.
Am I
Yeah,
audible,
audible,
sir?
sir? Yes, sir. Yes, sir.
Distinguished professional colleagues, my seniors, my friends, Yogi Saab, and the guest of the honor today, learned Additional Commissioner Saab, Girish ji. Am I audible, sir, in the house? I'm asking the other
So-
friends, sir.
So you need to speak up a little bit more.
Oh, I see.
Your
I
voice
see.
is a little feeble, sir.
Oh, I see. There is some miss, sir. Sir, I'm sorry. This is some network issue. Then, am I audible now properly?
Yes, sir. We can hear you.
Is it better? Then,
Yes, yes. Better, sir. You can proceed.
thank you. Thank you. So, I believe today the duty which is given to me, sir, at the branch is to deliberate upon the important areas of jurisprudence concerning the tax audit, Jogi Sahab. And what we were deliberating other time in the Bangalore branch, I believe, last my session I had in the SIRC on this very topic when Naveen Kheriwalji invited me. And there also we have been discussing these issues, that how we can understand the tax audit report in coalesced manner with the provisions of the Income Tax Act in the chapter concerning profit and gains of business and professions. So I believe I have a very learned audience today, and some friends are physically present in the branch, and some friends are there with me in the virtual box also, panelist box. So I give my respect and regard to each one of you, Virenderji and Jogiji and everyone, sir, Narenderji and everyone, and additional commissioner, sir. So today we will be deliberating, sir, on the litigation side, jurisprudence side. See, I have already said, sir, Jogiji, to you, and you know, I am not filing tax audit reports as such, being now practicing at the High Courts and Supreme Court and Tribunal. So, as far as the procedural part is concerned, that is filing part is concerned, I am sorry, I am, you know, I have already told you that I will be comfortable to speak on my jurisprudence part and substantive part of the report and tax audit report vis-a-vis the jurisprudence area. So there has been lot of, I believe, if you go to the chapter concerning the business head of taxation, sir, in the income tax law, and in one hand you keep this chapter. This chapter is there. If one has the law book, one can note down this chapter in the income tax law book starts with this is chapter 4, I believe, and chapter 4 and the part D is there. Chapter 4, part D. Now, what is chapter 4 about? Now, you know, sir, before entering into chapter 4, it is very important to, and what is chapter 4? Chapter 4 is computation of total income. In that, there is a part D, which is profit and gains of business or profession. Now, if, sir, one can note down the framework of the law in which this chapter 4 is placed, it is placed after 3 chapters, and the immediate preceding chapter is the chapter concerning the incomes which do not form part of total income. That is chapter 3. So one has to understand this dichotomy, that one enters into chapter 4 when you already have passed chapter 3. That is income has to form part of total income, sir. I believe in this, you are getting this point. So one has to understand this, how we reach to chapter 4. Because it is very important to understand the concept of the law, rudimentary principle of the law, that when you enter into business head, when you enter into the chapter concerning profit and gains of business profession, when you have some income which is otherwise not excluded under chapter 3, then you come to chapter 4, and then in that 5 there are 5 parts, I believe. Part A is salaries, part B, which is now omitted, part C is income from house property, part D is PGBP, part D is PGBP, part E is capital gains, and part F is income from other sources. So this has also been a matter of a very serious understanding or a dispute, sometime bone of contention between the department and the SSE. That when you go to chapter 4, you have what is the starting provision of this chapter? You can note down section 14, that is heads of income. And immediately thereafter, there is a section which has been again a matter of a serious litigation. I will also discuss this section 14A, which you all know has been a matter of great dispute between the SSE and us. And we people like ITT, Vakil and councils have got a lot of cases on that. And still the litigation is going on, Virenderji, on that section 14A. So my friends will appreciate this, that there is this chapter 4, sir, computation of total income starts with section 14, and it goes down the line, and the ending section of this chapter is section 59, which is in the income from other sources. So what is, sir, I'm telling about Jogi ji, that one has to understand what is this gamut of the total income. What is this? I believe in the hall the voice is going properly, sir. And can you confirm? Somebody confirm, sir?
Yes, sir. Yes, sir.
Okay. There is no issue with the voice in the house, na? Where my friends are sitting.
No, sir.
Okay.
If there is anything, they will just let you know, sir. No problem.
Okay, okay, Jogi ji, please. So what I was submitting, sir, that we have in the income tax law book chapter 4, we have in the income tax law chapter 4 part D, we have in the income tax law section 14, which deals with 5 heads of taxation. We have lot of issues going on in which head which income falls. I will just come to all this. Now, what is important is to understand when you have tax audit, when you have business head, see, where is the tax audit domicile? Now, you know what is the provision of the tax audit. Now, Jogi, the provision is section 44AB. And that is in chapter 4 part D. So one has to understand in that manner how you come to chapter 4, how you come to part D. So I believe if supposingly if you do not touch chapter 4, if chapter 4 is not applicable to you, let us say business head per se is not applicable to you, then tax audit per se will not apply to you. Are you getting my point? Let us take an illustration, sir. Supposingly an assessee is there who is earning crores of rupees of income, which is otherwise not falling part of total income, and it is excluded in chapter 3 itself. Will you say it is can you say it is subject matter of tax audit under 44AB when business head itself does not apply, when 5 heads of income are not attracted to the taxpayer at all? Are you getting what I'm saying? There can be a specialized report in that section in which exemption is claimed, etc. But to come into 44AB, it is prerequisite that business head per se applies. I hope you are getting my point. If supposingly an assessee is there who is having only tax exempt income, and this is let us say it is totally exempt income and it is falling in chapter 3 and it is in section 10 wala list, then there is no tax audit requirement to my understanding. Yes, you will say, somebody can say, Mr. Goel, there is a tax audit, our guidance note on a tax audit institute by our parent body, Institute of Chartered Accountants of India, somewhere gives a different understanding. And that is Jogi ji, that is from a professional side of you, that it is better to have the tax audit. See, I am saying in very humble sense. So your smile, little smile says it. You understand. So what is this? That otherwise, if income is exempt, there is no requirement of tax audits. Yes, exemption of income is different in chapter 3. And when you come to other chapter, in which you get the deduction, sir, that is a different thing. Then you have to pass through 5 head of taxation. This is the law. So what is the income tax law? Income Tax Act says total income is assessable. Total income is defined in section 2 clause 45. You can note down section 2 clause 45 is the definition of total income. And the definition says the total income means the income computed in the manner in the act and as falling in section 5. Section 5 is scope of total income, residential status wise, and what is the manner in the act. See, it is very important. Section 2 clause 45 1 reads the total income definition. It says income has to be computed in the manner in the act. Jogi ji, am I audible properly, sir? To my friends in the hall, can you confirm?
For me, it's audible, sir. Raghunan, sir.
Sir, you are audible, sir.
Yeah.
Okay. Thank you, sir. Thank you. Kindly confirm me in between because I have 2 places. See, otherwise I would be and whenever you feel I have been some disconnect is there, you can tell me. I will repeat what I said. So what I was saying, sir, section 2 clause 45 is the definition of what total income. It says the income is the income which is computed in the manner given in the act and as referred in section 5. That is section 2 clause 45 total income definition. And computation of total income is the chapter 4. Are you noting down? And chapter 4, there is a section 14 in which 5 head of taxation are there. And before chapter 4, there is a chapter 3, income do not form part of total income. And after chapter 4, there are various chapters, Jogi ji, in which you will find a lot of discussion on what are the rates of tax. There are various provisions in the law, I can tell you, where special rate of tax is there. So that is a different thing. Are you getting my point, sir? So if you now compare this with the tax audit, what is tax audit about? The tax audit is the concept which was inserted in the income tax law in the chapter 4 part D business head. You can note down, everyone is aware that 44AB is the section. What I want to tell is when this provision was inserted in the Income Tax Act, 44AB was inserted, sir, when Mr. Pranab Mukherjee was the finance minister of the country at that time in 1984. That is Finance Act 1984 with effect from 1st April 1985. I believe that is the birth date of this provision of 44AB, sir, Raghunathji. Now, 44AB, Raghunathji, born in 84. And now its life is 84, say 94. You can count it. How many years this tax audit is old? If one goes to interesting way, that what is the age of tax audit provision? So we are in 2021. So it is 894, 2004, 2014, and there is, I believe, 2014. I believe it is somewhere 37 years, Jogi ji. 37 years. So you have more than 35 years now, I believe, of this provision 44AB, where this provision has been in the Income Tax Act from last 35 years. Now, what strides it have made left? You know that this provision of 44AB has dramatically increased itself in the proportion of the reporting requirement of the report of 3CD. Now, what is this 44AB concept about? If you go to the memorandum explaining provisions of Finance Act 1984, that is the law when this provision was inserted. Then Pranab Mukherjee Sahab very categorically said that the purpose of the tax audit is this, that if a specialized person is there who, what you say, goes through the accounts of the assessee and first-hand manner, and when the assessment of the assessee takes place, the assessing authority has the able assistance in the form of tax audit report. That was the goal, that was the mischief, that was the intent, that was the purpose behind the introduction of 44AB. And I believe, as a student of law, Jogiji, somebody who is doing tax audit should never forget this goal post. You know, now in football there is a goal post. So what is the goal post, Raghunathji? The goal post is that the purpose of the tax audit was to have an assistance to the tax administration and the revenue authorities when assessment of the taxpayer takes place. That tax auditor Saab has already scanned the small details and the business transactions of the taxpayers. But the purpose of the tax audit was to help the taxpayer, assessing body in the right assessment of a taxpayer. This is also very important, Jogiji. This is very important goal. See, one cannot forget it. What was the purpose behind 44AB? Now, if you go slightly further, then you will find, Virendraji, there is lot of changes which has happened. 1984 wala report and 2021 wala report ko aap check karenge, you will find there is it has made a very high jump, as Neeraj Chopra ji has made a high jump and win the gold medal for the country in the Olympics. I believe our tax audit report has also made some kind of high jump, sir. And the report, it was there, Jogi ji, in the time when it was inserted, and the report, it is today there. Raghunath ji, it is totally different report, sir. And I say it for a reason, Virender ji. The reason is this, that now in the tax audit report, can you imagine the bandwidth or the territory or the horizon of this report of 3CD? It does not restrict itself to the business head of taxation. It also includes other sources and other heads, capital gain head, etc. Are you noting my point? This is a sharp change. This is a drift. When you are doing tax audit, you are also supposed to see if 50 capital C is applicable or not. You are supposed to see that 56 section is there. Now entire 56 is brought. You are also supposed to see share premium wala point. And you are also supposed to see the entire compliance to the TDS chapter, which is the most ODL and most difficult, most troublesome, and Virender ji is filing most difficult task. Like going to Mansarovar Kailash, I always say, or like going to Ganga Sagar, or like going to any other Tirath, it is like I believe, always say, sir, TDS wala part in the tax audit report is like an audit within audit. See, it is like this, when you are doing a tax audit, I believe you have to do some mini audits in that. What are those mini audits? I hope you are getting my point. Mini audit can be ICDS wala part. Mini audit can be TDS wala part. Mini audit can be capital gain wala part. Mini audit can be other sources wala part. Now it is covering it is diversified report. It is now very densely populated with various classes, which covers various provisions in the Income Tax Act, not restricting itself to Part D, profit and gains of business and profession. It includes other parts of the Chapter 4. That is, I was saying, Chapter 4. Are you getting my point? But there is a there is some change, I believe. What now question is this, Jogi ji, I always ask myself, ki what is the real intent of the regulator and the government or the legislature, and what is the real expectation of the legislature when you are doing a tax audit from you? Girish ji is there, I believe, in the seminar. He will also somewhere say this if he's there. That what is the purpose of, see, what is the real expectation and of the regulator when you are doing this tax audit report? Now, what are these? Where is this? I have got a printout. Sorry, for seminars only I have to. When Jogi ji like preference calls us and these people, so this we have to study, sir. Yes, I am aware about business head, but I am not aware too much about this tax. I am afraid. See, my tax auditor is also done because now I am an advocate. मेरा भी receipt, sir, tax audit में आता है तो मेरे को भी कराना पड़ता है tax audit. So question is this, Virender ji, this tax audit report which I am having in my hand, it is containing, I believe everybody of you will be more aware than me, it is 44 clauses, I believe. 44 clauses are there, I believe, sir. And it is a very wide report. And I am asking a question to myself to start with. When you are doing a tax audit, what kind of expectation the person to whom you are giving this report, that is the government, and issuing it to the with the return, and it is enclosed with the return as a accompanying document under 139 section, Jogi ji. What is the real what do you say, underlying what do you say, underlying expectation of the regulator from the tax auditor when you do the tax audit? Is it like this, they want to know the maximum tax liability of the assessee? You note down. Are they wanting to know from you, what is the tax liability of the assessee? Are you making the tax computation of the assessee? Are you noting my point, Virender ji? The idea, whether, question number one is this, whether it is to compute the tax liability per se. Second, whether this report, which is drafted by the tax auditor, whether it is again binding on the department and the assessee. Whether assessee can say that I want to have a deviation, or what do you say, na, dissent. See, can auditor and auditee dissent on a point of view? That is a question number two. You can note down. Question number one was this, whether the tax audit is to compute the tax liability. Second question is this, sir, whether tax audit report is binding, Jogi ji, on the assessee and the department. Question number three, that when you are doing the tax audit, are you doing some kind of mini assessment, tax assessment of the assessee? Then only you will find out something, what is this about? Is it a tax computation made by the auditor, a step short of the return on behalf of assessee, or it is something like this, that it is an assessment done by the auditor in a summary, in a what you call as that just before a assessment of the income tax takes place, the assessment is done by the tax auditor, tax assessment. Is it like this? This is question mark. I am saying these are question marks. Fourth question can be, what is tax auditor doing in this? It is like this, that he has to check entire each and everything in the books and each and every transaction, and he has to Delhi High Court and Gujarat High Court in two decisions have hold. Delhi High Court's order is Escorts Limited case, where they have hold, the Delhi High Court judges, that this 44 AB tax auditor report is not binding on the assessee or the department. Are you getting my point? It has persuasive value. It is like an opinion. The true nature of a tax auditor, Jogi ji, can be evaluated when you go to the judgment of Delhi High Court by Justice Sanjeev Khanna Saab, now who is a Supreme Court judge. He has given a judgment in Delhi High Court while sitting in Delhi High Court in the case of Escorts Limited, where his lordship has said
that merely because tax auditor has qualified something in the 44AB report, that does not become binding on the taxpayer and binding on the revenue authorities. It is merely an expert opinion. And it has persuasive value. It is not conclusive in nature. Are you getting my point? So we have to understand the nature of the task in 44AB also. I believe, with due respect, my senior friends, I am looking one, sir, who I believe is very veteran person, sir. So all of you are more veteran than me. And maybe I have not done this much of tax audit. Jogiji, immediately when I qualified after 3-4 years, I switched over to the legal side. But yes, I can tell you 44AB is not binding on the SESI, is not binding on the revenue. Sir. It is persuasive. It is expert opinion. And it is not tax computation of tax done by the computation of tax is done by the SSC. Are you getting my point? You know how I say this? You can go to section 139 subsection 9 when you read defective return. Now you can vouch me. There is a statutory support to my statements which I am giving here. Section 139.9 statement of computation of income and tax liability is different thing, and assessment. I believe there are a lot of auditing standards which you are more aware. You all of you are is not my domain, or even I am not aware about those auditing standards. Sir. But I am submitting that when the tax audit is done, is it equal to tax assessment? No, it is not even equal to tax assessment. Because again, the judgment of Delhi High Court, it is persuasive only and it is an opinion only. It is not equal to final assessment, or it is not equal to assessment which is done in the income tax law by the AO. So it is not exactly computation of tax liability. It is not exactly tax computation. It is something in between. That there are clauses in the tax audit report wherein auditor Saab has to send to the department what are the transactions done by the SSC. There are reporting clauses and there are judgment clauses. Judgment clauses are where the tax auditor also gives a judgment. It's a hybrid report, Jogiji. It's a hybrid report. Are you getting my point? Hybrid report, you know, it's mix of two types of clauses, basically, predominantly. In one type of clause, reporting clause, you are giving it, say, for example, if a transaction is done with a related party under 40A2, you know, na 40 is capital A subsection 2. Now that reporting is there. You have to just say, hey, in the sense that if related party is there, related person is there, and businessman and taxpayer has done some transaction with him, you have to give reporting in that. What is the transaction? What is the amount, etc. You are not supposed to say what is the reasonableness of the expenditure. That is the job of the AO, which is not in the report. As far as I understand, you correct me. But there are clauses, Jogi ji, where you have to also tell. That is my area of discussion, which I will deliberate in next 1 hour, where you have to give the judgment to the in the report that what is the admissible expenditure and what is not the admissible expenditure. Are you getting my point? What is the allowable deduction? What is not the allowable deduction? What is taxable capital receipt and what is non taxable? Long tax audit report. I heard from my CA friend, Jogiji, some CA friends, there is a long form audit report in some company law. There is a long form report. I believe this is some kind of word, or what is this?
It's for banks.
Audit.
I see, I see. So it is now a long report, I believe. 44 clauses cannot be I believe someday, I'm sorry, on lighter side, I'm digressing, my senior friends will happily take it. That someday, sir, some time should come, then when fees to the auditor should be given clause wise. Jogi ji is smiling. See, sir, this is the idea. See, sometime I believe somewhere, some stage, the tax auditor should get the honorarium for the job or clause wise. See, आप class पे class डाल रहे हैं. मतलब the department, government is adding class after class after class. But the auditee is, I'm sorry, with due respect to businessman, I believe, Jogi ji, that how many businessmen takes this job of tax audit so seriously, as Girish sir was also saying. They take seriously this. There is that culture, that tax audit culture. Do the people really, when you do tax audit, they want to get their inventories, etc., vouched? See, tax audits edifice is this, sir. If you are saying no, Jogi ji, say clearly and loudly, as I am saying. Don't timid yourself. So, see, there are 3 points. One is it is not equal to tax computation. Second, it is not equal to tax assessment. Third, it is persuasive expert opinion. Fourth, there are two types of clauses, Yogiji, in this. One is reporting clause and second is judgment. There are four principal things. And fifth, if I now go to fifth one, it is based on sampling base. Now, you are supposed to look into the material things. I believe Institute of Chartered Accountants of India, our parent body, in the guidance note, has various places in various clauses have said, while analyzing, doing tax audit, you are supposed to go by materiality concept, sir, and you have to go by sampling concept. I believe that is allowed. And suitable, if you are not being given suitable information for a reporting in the class, then you can also give suitable disclaimer in the opening of the report, which is a form number, you know, na? That is a initial form. Opening form. What is form 3CA? That is, what is this? 3CB. What is that? That is the opening form in which there are columns that subject to this description. Yeah, 3CA and 3CD. 3CD is okay. 3CA mein there are clauses, I believe, somewhere, yes, sir, in the beginning itself.
Yes, sir.
Virender ji,
3CA or 3CB, sir.
Yes, sir. Okay, okay. Yeah, yes, yes. So suitable disclaimers can be given, I believe, there, I believe. And suitable, what you say, exceptional listings and can be pointed out. I always say in lighter side, sir, that is a man ki baat of the auditor. You know man ki baat na, or this is also a very interesting phrase nowadays. So that is a man ki baat. So now you will understand. So anyhow, actually, that is another. I have given this prefatory remarks because the topic to do the justice to my topic, sir. What is about tax audit? What are my thoughts about tax audit? As I have learned in my 15 years career, Jogi ji, you have told 1,000 cases. It is not 1,000, more than 2,000 cases I have argued till date in the income tax tribunal, high courts and Supreme Court. So now what is happening is what I have learned in the income tax law, sir, in the courtrooms and in the seminars, I will share humbly that experience on the business head and litigation wala point. So what is this business? What is this now? You have at one side the long audit report, tax audit report, and on the other hand, you have a chapter of the business head, sir. It's, you can note down what is the business heads framework chapter 4D. It starts with section. Always our seniors and elders says that it is very important to have the law book in the hand. And when you read with the law book in the hand, it is like this that you are having Gita and Ramayana in the hand, and then you are understanding the law. Maybe you have read it 100 times. Sorry. Section 28 to section 44 DB. Now the what do you say? The bandwidth of business head chapter 4D is starting section 28 and 44 DB. And what not it contains, sir. And there is a one very interesting popular section, that is a definition section of the business head. That is section 43, my friends can mark. Section 43, definition of certain terms relevant to income from business and profession. Are you noting my point, sir? So what is this about? I am telling about one very interesting thing. What we understand, Jogi ji, ki chapter 4D is the heading computation of total income. In that there is mini heading, you can note down profit and gains of business and profession. But can somebody tell me how you compute the business income in the business head? Is there any particular method of accounting defined in the law? Yes, Jogi ji, Avinder ji. Is there any method of accounting in the law? I believe you, all of you will recall section 145 is there in the income tax law book, which says that in the assessee has an option. This is assessee's option. Kindly take note down this point. Who has the option, Jogi ji? Assessee has the option while computing the income under the head other sources and while computing the income under the head PGBP, whether to follow mercantile system or whether to follow cash system. Am I with you or not?
Yes.
Cash system is allowed, na sir?
Yes.
If assessee has opted, can department interdict it? No, we are not happy with this method. We will change it to other.
No.
Be cautious while saying, Mr. I will lock it like Amitabh Bachchan Saab locks it. Sorry, I am a very small man. Amitabh Bachchan Saab is a very big man. Small man. But point is this, I will lock it. So you say that Mr. Goel, in method of accounting, it is the prerogative of the taxpayer to choose which method of accounting, that is mercantile or that is whether cash system. Now you can quickly note down, Jogi, one very interesting legal points on this. First point is this: to follow mercantile system in the company's law, can it follow cash system limitedly for the income tax law? Say loudly, sir. No, I can't take emojis and emotions. Sorry.
No, sir.
This is not WhatsApp. This is a very important seminar. And
No,
you
no,
are
sir.
looking very handsome also today. Tell us. Tell us. Tell us. Yara, you are looking handsome, you are becoming faceless. So you tell us, ki Mr. Goel, whether you can follow for a company, which is in the company law, supposed to follow accrual system, can it follow for the income tax law cash system? I am having a very serious question, sir. Yes or no?
No, sir.
Why no reasoning?
No.
No, you reasoning?
Because again, if tax audit is applicable, then
they have to
ICBS
get
is
their account.
also applicable.
Sorry, one at a time, sir. Yes, please, go ahead. Tell us, Virendraji, what you were saying. I believe somebody was saying. Jogiji, tell us.
Virendra, sir.
I believe Virendra sir is. Anyhow, let me speak. Let me
There's some
me
issues
give
with the
my point.
network, I think.
No, not an issue.
Hello, sir.
Let me. Yes, sir.
Yes, they can.
Rao sir.
Yes, Senior Chartered Accountant, Mr. Ravi Kumar speaking.
Ravi Kumar, sir. Sir Ravi Kumar. Yes, sir. But what is your kind view, sir?
They can.
That he's absolutely right, sir. I would like to have a clap for you, sir, in my own sense, sir. And why I say, because this is a fundamental principle of the law. You Ravi Kumar, sir, you will appreciate, and one can go to what you said for this to check it in the Pithisaria commentary, leading commentary of Pithisaria, oldest commentary. There also the learned author stated, Ravi sir, that an assessee who is company assessee, maybe in the company law, they are supposed to maintain the accounts in a particular manner. But that does not take away the right given to them under 145 section of the income tax law to opt for cash system. That is, I believe, Dr. Anita Sumant, a very leading judge in the Madras High Court. Dr. Anita Sumant, the Madras High Court has vindicated this thinking, sir, Ravi sir, on this, that yes, I believe the leading judgment is from Madras High Court, sir. Where the Madras High Court has come down to this issue, and that is company law system, sir, can also opt for cash system in the income limited for the income tax. I think Ravi sir is comes here is important thing in this. Somebody told 145. Goel sab is there in 145, where there is some adjustment recommended while in business side, I believe, sir. Yes. Now this is very interesting. Section 145A. It says that for the purpose of determining the income chargeable under the head PGBP, that is chapter 4D, which we are discussing. Inventory in accordance with the income and computation disclosure standard as noted. My point. And inventory shall include the amount of tax, duty, cess or fees actually paid or incurred by the assessee to bring the goods or services to the place of its location, and the condition as to the date of valuation. Now there is one issue, Ravi sir, going on. That what is this recommendation about? 145A. Sale purchase of goods and services and GST is livable. So when you account for in the what you say in the books, the turnover part, whether it should include GST or it can be off GST, can be a separate account. And if it is a separate, then what adjustment will be done while computing the business income when you will do the tax audit, or for that matter, or when you will be filing the return of income? Are you getting this question, sir? This has been a raging controversy, I believe, the time when GST came. Because earlier this has been the viewpoint that this is a tax neutral situation.
Yes, sir.
Revenue neutral situation. I believe this has been the traditional orthodox view. Now, but this conventional view, whether it gets changed after GST, sir, especially when Ravi sir, the assessee is not including GST portion in the purchase value and the sale value in the books of accounts, sir, and it is
Separate account.
But question, Ravi sir, is another question I'm coming to now. That when you will we will file the ITR and we will compute the tax liability of the business income as per 145A, whether we will, what impact it will have that we have done net accounting. It will be neutral according to you also. See, I also feel so, because ultimately that it is I believe in, if you see in a broader horizon, that this is an issue. If supposingly in a year one we are talking about, there is some less income, Jogiji, which SSC has shown, but in the year two it will automatically, see, over a period of time it will become neutral. That is my understanding. But the law I am talking about is 145 capital A subclass 2. Which now, earlier it was not including the word services, Ravi sir. Services word came later on. Are you getting my point, sir? Services wala tax wala portion was not initially there. It was goods tax only. Are you getting my point? Tax on goods. It was tax on services was not included in 145A. It was late included subsequently by Finance Act. I can tell you that law also, sir. It was included, sir, somewhere in Finance Act 2018, I believe, sir. You can note down. Finance Act 2018 and I believe or Finance Act 2009. Somewhere later on this was done, because earlier in the prior to amendment, what the law used to say, only the tax on the goods has to be included. The services wala portion has been included, I believe, later on. Anyhow, that is one part of it, sir. The second controversy is, Ravi sir, here is very interesting controversy. I want to your views also, sir. Learned views, that if supposingly an SSC is there, sir, he is to be assessed in presumptive tax, that is this 44 ADA and 44 ADA. There are two provisions, I believe, for three rather, 44 AD and ADA for the domestic people. For non-resident, there are other presumptive provisions. Supposingly, sir, there is an assessee who is opting for 44 ADA, etc. When you will compute that, what you say, turnover wala point, na, will you take it? Will 145A will applicable to 44 AD and ADA also? This is my humble question. I hope my query is clear. That when you will be in the presumptive tax and when you will compute the basic turnover, whether you will include 145A wala part in that turnover or you will exclude it, or it will be natural turnover only.
Natural turnover only, sir, excluding.
Why you are saying so, sir? It is for the assessee benefit or something else? Sorry.
As good as it's a tax neutral status now, sir.
I see. I also vindicate that thinking, sir. That 145A wala jo adjustment, that adjustment of 145A has to be done in the normal income computation provision when you are in normal business income computation. When you are in special income computation, that is presumptive income, then probably 145A would not be imported into the deeming fiction. Are you getting my point? There cannot be fiction into fiction. I hope that is clear, sir.
Yes.
So what I was submitting, sir, method of accounting is very important in section 145 and 145A. This, what you say, it is headed as method of accounting in certain cases. Now law gives us permission to follow and law gives us option to follow cash system and mercantile system. Now I come to business head, now section 28. It is a charging provision of the business head is section 28, sir. There are various items, services in the business head now in the charging section. It is also expanded itself by the lapse and bounds of the time. Initially, when I did qualified, Ravi sir, and when you would have qualified, sir, the CA, the size of 28 section, or for that matter, these sections, and now the section size is very largely expanded, sir, I can say. So that is another thing. So section 28 contains, first clause is profit and gains earned by the assessee in the business. You kindly open the business head section 28, see the very first clause. This is very important, sir. What we are discussing here is section 28 clause 1, which starts with the language that profit and gains of any business or profession which was carried on by the assessee at any time during the previous year. So the word used is profits and gains of any business or profession. Profession is included here, which is carried by the assessee during the any time in the previous year. Previous year is also defined in the law. Now business head presupposes, I believe, you know when business commences, sir. When business commences, Ravi sir. There has been a lot of litigation going on in various courts in the country. When you say business is commenced within the meaning of the income tax law, that is section 3, sir. The word setting up is used in the law, business setup. And then previous year commences. Are you noting my point, sir? Section 3 is there, which is very important to understand again, the cycle of the business head. That is section 3, that is setting up of business. Sometimes we are our what do you say, difference of opinion comes between the revenue and the assessee, that what is the crucial date of setting up of business. Do we know what is the sanctity of this date, sir? Anything prior to this date, anything post this date will have a sea change, sir. If something is done prior to setting up of business, as far as expenditure is concerned or as far as income earning is concerned, pre-operative, you say, pre-operative income and pre-operative expense, then that is having a different status in the law. And when you have post-operative situation, then is a different situation in the law. So I believe one has to be very careful in the case of the businessman whose you are filing the return and whose first year you have, Yogi ji. And then you have to be very careful in understanding what is the concept of setting up of business. Court says setting up means ready to commence business. Business might not have commenced, but it is ready to commence. If flight has come to the runway, it is ready to take off, but it has not taken off, business is set up. I believe it is a sharp example. If flight is come to the runway and it is on the runway and it is ready to take off, but it has not taken off still. And let us say another example for a CA. Kapil Goel or any other matters has qualified, got COP, but no income has come, Raviji. Then it does not mean that my expenditure will not be allowed just because I have not got any revenue. See, getting the revenue and claiming the expenditure and setting up a business are all different three things, sir. Sorry. We can't make a confluence of the same. Sorry. Business setup means ready to commence business. That is the law which is settled by various courts and it is no longer res integra. The second point I was saying, sir, there is nothing in the business head that you have to claim expenditure, Jogi ji, only when you get the revenue. Otherwise, there will be no loss. See, sometime what happened, Raviji, you will appreciate, sir, that sometime between, and Girish sir will also appreciate, sometime we have seen those revenue assessments, sir, tax assessments, where our expenditures have been disallowed by saying that assessee is not in the receipt of some revenue, so expenditures are disallowed. That is not the concept. Concept is this, that if you have already set up the business, you are already in the business, and if the business is, even if the business is in lull stage, you know now, sir, lull stage. Lull means there is temporary suspension. Then also the expenditure which you are incurring on the establishment and fixed expenditure, you have to be allowed. Are you noting my points? So section 3 is one thing, setting up of business. Ready to commence business is another thing. Third thing is that merely incoming is not there, expenditure is not dependent on that. There is an old Supreme Court ruling, sir, which says that in the income tax law, it is not like this, that if you will get if an expenditure is remunerative, then only it will be allowed, sir. There is no such concept in the business head. Are we noting it down, sir? So that is the fundamental principle, sir. Now coming to the section 28 and all this business head of taxation, sir. There are 10 or 12. There are some important key rulings, sir, which I have pointed out to discuss now in this dialogue. One is the latest order of the Supreme Court. I will start with that, sir. Yogi ji, the latest order of the Supreme Court is in the case of, this is the latest order of the Honorable Supreme Court on section 43 capital B. There are quite a number of developments on section 43B. I will discuss everything, try to discuss everything, sir. And 43B has been again a subject matter of attention by the department also, and in the various assessments also, sir. And in the part of tax audit report, I can tell you, 43B is part of tax audit report also. I believe you understand. Should I tell you the clause? That is clause 26 is there, I believe. Clause 26 of the tax audit report, sir. So 43 capital B, sir, there is the latest order of the Honorable Supreme Court, which I wanted to discuss, is in the case of Aqua Limited, 436 ITR, page number 582. I believe everyone should note this order. 436 ITR, page number 582. Now, what is this order about, Jogi ji? This order is about this 43B section, which is an exception to mercantile system. You know, generally when you are in mercantile system, the expenditure can be claimed on accrual basis. But 43B says it will be done on payment basis only. It is an exception to accrual system. 43B says, notwithstanding anything contained in any other provision of the law, following types of expenditure will only be allowed when you have paid them. I hope get my point. So that is an exception to mercantile system, 43 capital B. The idea behind 43B was this: these payments are somewhere social payments, something relating to employees, something relating to other important social, what you say, the social part of the obligation of the businessman. So they say businessman should claim it only when it is paid. If you go to 43B now, you will find the common underlying kind of nature of the payments. And now, what is this case about Aqua Limited, which has reached the Supreme Court? And this is the order dated, Jogiji, on 11th August 2021. This is the order dated 11th August 2021. It may ignite very, very serious interest of various participants, sir. What is this about, sir? In this case, what happened? An assessee, Aqua, entered into a rehabilitation plan with its financial lenders and creditors. And the liability of the interest which was outstanding in the books, which it could not pay, and which was only allowable on payment basis under 43B. That interest liability of financial creditor, now you know it is also captured in 43B. You will appreciate this. So what they did, Aqua, sir, the liability of interest was discharged by converting that liability or by entering into a rehabilitation plan with the financial creditors, and this interest liability got converted to, and it was discharged, and it was converted to, I believe, to debentures. And now the assessee said that it is a discharge of the liability. Liability is discharged, and 43B should be allowed, and interest expenditure should be allowed. Department said no. You kindly note down section 43B, explanation 3C. Department invoked explanation 3 capital C to section 43B. What it says? Explanation 3C. For the removal of doubts, it is hereby declared that a deduction of any sum being interest payable under clause D of this section shall be allowed if such interest has been actually paid, and any interest referred to in that clause which has been converted into a loan or borrowing shall not be deemed to have been actually paid. Now it says that department underline interest referred to in this clause which is converted into a loan and borrowing will not be deemed to be paid. Now whether the conversion of the interest into debenture is a conversion into loan or borrowing was the question before the apex court. If it is conversion into loan and borrowing, then assessee's claim will be hit by explanation 3 capital C, that it is swapping of one liability by other liability. But if it is not conversion into the loan or borrowing, then definitely assessee's claim will not be hit by explanation 3C, and it will be allowed the expenditure, sir. Now, Jogi ji, assessee, now kindly note down explanation 43C, this explanation 3C was inserted by Finance Act 2006. The Honorable Supreme Court, while allowing the appeal of the assessee and while saying that it does not fall in this explanation 3C, which I have read, referred very heavily and relied heavily on the subsidiary explanatory memorandum circular. You can note down explanatory circular behind Finance Act 2006. That when an assessee genuinely convert interest into debentures, then the intent of the law was not to, behind explanation 3C was not to cover it. So this interest converted or remitted by discharge of debentures, by issuing debentures, is valid payment under 43B, and a claim of expenditure assessees is maintainable and it is allowed. That is Supreme Court held. And 43B, this explanation 3C, I am saying again and again, it was inserted by Finance Act 2006, the memorandum circular of the CBDT, explanatory memorandum circular. Now, Supreme Court, Jogiji, very, very significantly in this path-breaking order has given emphasis to the legislative intent. You know what is the significance of the legislative intent in this order, which has come out very, very, very shiningly, flashingly? Is this that if a provision is brought in the law for a particular purpose, and if assessee's case does not fit into that purpose, then the law cannot be applied, is the Supreme Court view by Justice Nariman. And for that, they have applied old judgment of Supreme Court in the case of KP Varghese 131 ITR, page number 597. This 436 ITR 582 relies on 131 ITR 597. KP Varghese judgment, which is again a assessee of South, but a locus classica, celebrated order, celebrated decision of KP Varghese 131 ITR, page number 597. So I believe 43B is one part, but the legislative intent is brought and given primary weightage to allow the claim of the assessee, I believe is the major message in this, which is a landmark path breaking order, I believe. But as you know, we all as a student of law sometimes feel, sir, if the assessee is hit by the plain language, then legislative intent might not come to the rescue of the taxpayer. But this judgment has said other thing. This judgment has said, no, even if the plain language is not helping the case of the taxpayer, but legislative intent is helping, then legislative intent will be given the primary weightage is the Lordship's view. I hope you have noted it down. So this is about 43B Aqua Limited, 436 ITR 582. There are three important decisions on section 43B, Jogiji, which has come in last 1 or 2 years from the Supreme Court. You see how much 4 Supreme Court orders on 43B itself. One I have discussed Aqua. Second is Modi Pond Limited. It is in 400 ITR, sir. 400 ITR.
Connectivity lost.
Am I there, sir? Am I there, sir? Jogiji, am I there?
Yes, sir. For us, you are visible and audible, sir. Raghunandan, sir. Raghunandan, sir.
Sir, it is audible, sir.
Yeah, okay.
Can I continue, sir?
Yes, sir. Yes.
Yes, sir.
Or should I pause?
No, not really.
Okay, not really. Yeah, as you say, I can pause for 5 minutes, sir. If the Raghunandanji, in the hall, the audio is coming, na, sir?
Yeah, I will check with this. Just a minute.
So Jogiji, you are at which place? So the place is different, I believe.
Yeah, I am in Udupi, sir.
Okay. And they are in Mysore. Okay, I see.
And Virendra sir in Davangere and Narendra sir in Shivamogga. And you are from Delhi.
Now I understand.
It's all connected through.
See, it's also an hybrid mode.
Yes.
Some part physical and some part virtual. I'm sorry, I'm with my Mysore friends then.
Davangere.
Then I am with the Mysore friends.
Udupi and Davangere.
I see. Sir,
everything is fine. We can continue, sir. No problem.
Okay. Thank you. So nice. So I was discussing second order of the Supreme Court on 43B, and it's also very helpful order. It is in the case of Modi Pond Limited, Jogiji, 400 ITR page 1 somewhere. It says that supposingly, in some in direct taxes law, you happen to make some payment of the taxes in advance of various years. In, let us say, for next 5 years, you today make the payment of tax. This happens in the business cycles. So whether you can claim the entire amount in one go in 43B. I'm asking a question, if you happen to make the payment of the indirect tax, let us say, or some taxes, service tax, etc., let us say in one go of the various years in advance. Sabir Rai Shishanji, no. Sir, it is Supreme Court says it will be allowed, sir. Justice Ranjan Gogoi's order, our Chief Justice. That is what I am told you, Modi Pond Limited. Because this 43B makes a departure to entire that. So they have interpreted like this: if you have made a payment of, yes, sir, there is no matching of revenue. You are right. This is exception to matching principle, sir. But the Supreme Court has interpreted the law. Now it is the law of the land under Article 141. It is binding on the. See, I will answer, sir, who is saying that Mr. Goel, it should not be allowed. I will take it from another angle to academically ignite your interest. There is a decision of the Supreme Court, sir, which you can note down. In very important order from tax planning point of view, Jogiji, and very interesting decision to read again and again. In the case of Tapadia Tools, 372 ITR, page number 605. 372 ITR, I believe 605, Supreme Court of India, Tapadia Tools Limited. Now, what is this decision? And just read it in connection to this, but we have just discussed 43B wala point, advance payment. In this case, Jogiji, what was happening? Assessee issued some debentures and happened to what you say, that they are on discount. Means that you have to pay when they will be remitted, then you have to pay 100 rupees. And let us say I took 90 rupees today. So what will be the treatment of the discount on debentures which you have given at the time of issue? Whether you will claim it on deferred basis or whether you will claim it in the whether you can claim the entire basis in the first year itself. Now, assessing in the books of accounts, I don't know about accounting standards. You correct me, sir. Can correct me, who was the other sir? That in the accounts, the assessee was claiming it deferred basis on the lifetime of the debenture. But while filing the return and while computing the income tax liability, he Jogiji claimed the entire amount as the expenditure. Are you getting my point? Now, department said that once you are claiming is DRE, you know, na, as in deferred revenue expenditure in the books, you are also supposed to maintain the same system in the income tax also. You cannot deviate from that. Meaning thereby that matching of revenue wala point they brought it. And matching of revenue is the concept of Supreme Court order in Madras Industrial Corporation case, 227 ITR. Now, how Supreme Court met this? Now, very interestingly, Jogi ji, in this is the path-breaking order. I'm telling you, many of you might not have read it or might have you have read it. That it says that it is assesses prerogative if an expenditure which is otherwise claimable in this scenario. Whether to claim it on deferred basis or whether to claim it in one go, it is the sole prerogative of the assessee and revenue cannot interdict it. I believe this is a path-breaking order, sir. It's not a new order. It's now, I believe, 372 ITR 605, Supreme Court of India, Tapadia Tools. They say if assessee wants to claim it on the deferred basis, then department cannot say claim it full. And if assessee otherwise can claim it in full in section 37, then department cannot say you are in books claiming it deferred basis, so you claim it also like this. I hope you are get my proposition. So the prerogative is of
The assessee.
Assessee. That is 372 ITR 605 beauty. And if you read it with Justice Gogoi's order in Madhipon Limited 400 ITR on 43B, advance payment will be allowed. I believe both are call-assessed. There are two more orders of the Supreme Court on section 43B, sir, which have come. One is in the case of Exide Limited. My friends will remember there was an amendment which was done in 43B to bring leave encashment point also in this, sir. And Calcutta High Court opined that that amendment is unconstitutional. Leave encashment should not be part of 43B. Now, Supreme Court in Exide Industries Limited case, very recently in Exide Industries Limited case, Jogi ji, has reversed Calcutta High Court and has said that that amendment made in 43B to bring leave encashment into part of 43B is constitutionally valid. So leave encashment will also be allowed as per the system of cash system as payment basis as per 43B. I hope you have noted it down. And fourth ruling is Maruti Limited case. These are four Supreme Court rulings. Maruti Limited is a ruling which is against the assessee, which has gone against the taxpayer. There are some adjustment in the accounts of the assessee of the excise duty. Justice Ashok Bhushan, speaking for Supreme Court of India in Maruti Limited, hold against the assessee and rejected the argument of the assessee. The case was represented by the Ganesh Saab as Ganeshan Saab. And the Supreme Court very beautifully also again culled out entire characteristics of 43B, point by point. So in my understanding, 43B is a departure from the accrual system. It is based on payment system philosophy. But again, you have to go by Aqua Limited, I believe 11th August order. You have to also keep in mind, Jogi ji, what is the spirit of the law? What is the background of the amendment? And all those things have to be kept into mind. And one, this rehabilitation plan, debenture wala issue, this you can flag out. And second, advance payment you can flag out. These are two practical points, I believe, which can help you in your day-to-day practice. Now, take a second point of 43B, which is troubling you. I believe many of you would have these questions in your mind. I believe in my experience of last 3-4 months or last 1 year, I believe, Jogi ji, in all the seminars, somebody or the other has raised this issue. That Mr. Goel, what shall be the treatment of the payment, delayed contribution of PF, employees' contribution of PF? You know, this is a legacy issue now. Legacy issue, you understand? Legacy issue means is coming from so many nowadays. There are two types of contributions. Let us segregate. One is employer part of contribution. What is employee part of contribution? Employer part of contribution is okay. That is a different thing. Now there is an amendment in the law by the Finance Act 2021. I am straightway coming to the point. You can note down there is an amendment done by Finance Act 2021 where an explanation is inserted, explanation number 5 in section 43B. And there is an amendment in 3615A also. What this explanation 5 says, Jogi ji, for the removal of doubts, it is hereby clarified that the provisions of this section shall not apply and shall be deemed to never have been applied to a sum received by the assessee from any of his employees to which the provisions of subclause 10 of clause 24, clause 224 applies. Meaning that it is employee contribution which you receive, that is first treated as an income, and it is allowed as expenditure when you pay it within the due date of the concerned law now. That is the legal position with effect from Finance Act 2021, effect from assessment year 21-22. Assessment year effective is
21-22.
So will it apply to the law in which you are doing the tax audit now? Which year you are doing the tax audit? Assessment year.
21-22.
So yes, in that you have to keep in mind this. But what will happen to the other years, past years? Are you getting my point?
Yes, sir. It's a prospective amendment. No, sir.
Yes. There are now 5 tribunal decisions, bench decisions, sir, which have hold this amendment in explanation number 5 to section 43B, inserted by Finance Act 2021 with the AY with effect from 1st April 2021 is effective from prospective effect. That is rightly said AY 21-22, sir. That is meaning thereby for the previous year in which the revenue has made the adjustment in 143(1) CPC, Jogi ji, all those adjustments are wrong. Are you getting my point?
Yes.
The Delhi bench 5 orders have come, Kolkata bench has come, Hyderabad bench has come. I am telling you, there is a lot of decisions which have come this amendment after this Finance Act 2021 amendment, latestly in last 3 months, where they after considering this amendment in the 43B and 36(1) 5A also. 36 subsection 1 clause 5A plus 43, both you have to read together. Now, what is the problem? Practical problem is this, Virender ji, that you will read the tax audit report, now, then you have to definitely mention it. Then you have to definitely mention it in the class if the payment is delayed. Are you getting my point?
Yes, sir.
And they, as far as adjustment in the income is concerned, then you have to definitely make addition of this for the removal of doubts as per the amendment made by explanation number 5. I hope you get my point, sir.
Yes, sir. Yes, sir.
So these are the 2 parts of 43B. Now let me come to another interesting area of the discussion, sir, for my litigation wala part, special part, which I have told, which I really love to deliberate, sir. Now the second part is this, is concerning this 41 subsection 1. And this is also very interesting, section 41. Entire section 41 is very interesting, sir. It deals with that if supposingly you have, it's kind of a deemed income. It's a fiction. If you read the entire 41 section, what it based on, and it is part of tax audit report also. I believe all of you are aware. Tax auditor is supposed to comment upon the income taxable in section 41 in clause number 25. You can note down tax audit report clause 25. So what is this 41 about? Now let me take a practical case study, Jogi ji, then you will understand better. One clause is 25, and kindly take note of another clause so that we discuss both of them together. There is a clause relating to 56 to 9, which is in 56 to 9, you and 56 to 10, sorry. 56 subsection 2 Roman 10, where entire 56 to 10, that is clause number 29B. You can note down clause 29B. It is also very headache for tax auditors, sir, I believe. This says whether any amount is to be included as income chargeable under the head income from other sources as referred to in clause 10 subsection 2 of 56. Now see, it's a very onerous liability put on the already burdened shoulder of the tax auditors. I have my commiserations, Yogi ji, to the tax auditor, sorry. And somebody when is made to do something, now as an advocate, we understand that something done without fees is not very good situation. So what is now coming to point? The case study is like this, sir. Supposingly an assessee is there to you who is having taken loans from some financial institutions, and those loans he is not able to repay the principal. I'm not on interest, please. I am on principal portion. I am on the main part of the loan. Now, due to Virenderji some reasons, the assessee becomes sick, and that loan amount which he got is waived by the lender, creditor, that you are not required to pay me the amount. Are you noting my point? There are various outstanding loans sometimes, and the lender says, "Ki sahab, you are not supposed to make the payment of me." Now, what is the nature of this waiver when this loan waiver will happen? What is the journal entry done by the taxpayer? Jogi ji, tell me. Journal entry, you understand? And as a CA, we know the concept of journal entry. What will be the journal entry in the books?
The capital account will be credited and the loan account will be reduced.
The capital account is, you are talking about company. Let us take the case of corporate. You will take it in reserve and surplus, or you will take in profit and loss account? Where you will take?
Principally, it should go to profit and loss account only, because that loan is waived.
That is, I believe you are speaking from an accountant's heart, not from a
Yes.
lawyer's heart, Kapil Goel's heart. Sorry. So what is, you are right, sir. You may be right. I am not on this debating at all, because that is at least not in my knowledge now. Okay, what is your accounting pronouncement? So my humble understanding is this: even if you make a journal entry in the books, let us say, Virender ji, you make a journal entry that income is credited, that you say, Mr. Goel, we are crediting P&L account and we are debiting the loan account. That is the journal entry. Let us take this case. Now, whether crediting it into the P&L account becomes taxable. My first question to you, all of you, is this.
It's a waiver of
No,
cessation of liability.
you answer my pertinent question, sir. Whether this credit into the P&L account act of the SEC makes this automatically ipso facto taxable in the hand of the taxpayer within the meaning of PGBP head. This is my straight question.
No, sir. No, sir.
Sir, yes. Then you are mad. Sir, now you can note down this point. This is settled by Supreme Court way back in 1971 in Kedarnath jute manufacturing case. 82 ITR 363. 82 ITR, page number 363, sir, Virender ji, where the court said, Supreme Court says, followed in a lot of many decisions, that book entries are not conclusive to taxation. Are you getting my point?
Yes.
That just because you have treated something in the books as income, that does not become taxable income. And if you have not treated something as income in the books, that does not become, it is not taxable. It is both ways. Are you getting my point?
Yes, sir.
So entries in the books of accounts is not conclusive to taxation is the proposition which has been accepted by the Supreme Court in one of the leading cases of Kedarnath jute manufacturing, 82 ITR, page number 363, followed by the Supreme Court in Tapadia Tools, 372 ITR 605. That entries in the books of accounts are not germane, are not decisive, are not conclusive. It will be decided independently whether it is the character of the income in the hands of the SEC qua provisions of the income tax law. I believe this concept is clear to all of us, rudimentary principle and of law. Now, second facet of the controversy is this, Jogi ji. First is this, this credit into the P&L account does not make it taxable automatically. Second is this, now coming to the main core question, what is the nature of the receipt? What is the nature of this credit? Whether it is capital side or whether it is revenue side?
Capital side, sir.
Yeah.
Capital receipt.
Capital receipt. It is non-chargeable capital receipt.
Yes, sir.
And department now kindly take note of this Supreme Court ruling, which has, I believe, settled this issue to the majority of the extent. This is the landmark order of Supreme Court of India. Many of you might have read it. Mahindra and Mahindra Limited, 404 ITR, page number 1. Landmark order. 404 ITR, sir. Page number 1, Supreme Court of India, Mahindra and Mahindra Limited. Their department sought to apply, sir, two provisions to tax this amount, loan waiver amount, principal amount. What are the two provisions which the department relied upon? Section 28, Roman 14, 4, Roman 4, sorry. That it is a business perquisite. You can note down these two sections, 28, Roman 4, and second, they applied 41, subsection 1. Now, Supreme Court gave answer, rejected both the reliance on this provision, that they both are not applicable here. Kindly have taken the law book in your hand and see what is 28.4. 28.4 says, when something is not received in the form of money to you, then only business perquisite can apply, sir. In kind, you are receiving something. If you are receiving something in form of money itself, then it 28 clause 4 Supreme Court says per se is not applicable, attracted. And what about 41 subsection 1? 41 subsection 1 presupposes, sir, that you have already claimed something, benefit of something as an expenditure, etc., deduction allowance, and then you are getting back it. Have you claimed this amount as of loan as somewhere an expenditure and benefit? Answer, how is this possible? So Supreme Court jettisoned, Honorable Supreme Court discarded, rejected, negatived the reliance of the revenue on both these provisions of Business Act 28 clause 4 and 41 subsection 1. That it is capital receipt non-chargeable to tax. Till this is clear, sir? Jogi ji, till
Yes,
this point.
Yes,
Now
sir.
take a third aspect. This query is not answered, sir, Abhi, completely. Please take note of now. Now Department Virender ji comes from the back door. You know there is a back door, na? In people lighter side, back door of every door. In every situation, there is a front door and there is a
Backdoor.
back door. Now what is this back door I'm talking about? Sorry, on lighter side. This back door is that section which I was telling, and I'm also always very critical of this law, sir. 56 to 10. I don't know, Jogi ji, Ravi ji will tell, and our senior friends, that how these other sources have become so large in its operations, sir. Now it has not become other sources, it has become something else. I don't know. It is an alien law, it is something else law, sorry. But everything is covered in that something. It looks like this. It is like Vishnu Roop. It is like that Vishnu avatar. 56 to 10. And I'm very conscious when I'm speaking. I'm not saying, see, maybe I'm speaking on lighter side, sir, but I'm speaking on very serious side. What is 56 to 10, sir? 56 to 10 is the latest avatar of the amendment made by Finance Act 2017, explained in circular number 2/2018, that any sum which is received without consideration by the taxpayer will be taxable in 56 subsection 2 Roman 10, as amended by Finance Act 2017, as explained in circular number 2/2018 memorandum circular of the CBDT. Now department wants to say, Jogi ji, this sum of the loan waiver, which is otherwise not taxable in the business head, should be made taxable in the other sources in the head 56 and in the section 56 to 10. Is it possible? This is the third point of the controversy. They say this loan which has been waived by the lender so magnanimously is the income of the assessee in the head 56. Are you in subscription with this thinking of the revenue, sir? At least I am not in the humble agreement, sir. And with Chodiye, you will say, Mr. Goel, you are a pro man, assessee man. You always talk about assessee. So I am not like that, sir. But I am telling you, court has come, Chandigarh ITT bench decision has come somewhere, which has also said that even to this loan waiver, 56 to 10 will not be applicable. 56 section cannot be applied. Because you can't say, nah, this is received without consideration, Baba. When you received the loan, there was an obligation to repay it. It is the subsequent event of waiver by the lender that it has become your, it has remained with you. But that does not mean that you have received without consideration. Are you getting my point? So the jurisdictional criteria of 56 to 10 is also not fulfilled, is my humble viewpoint. So now you will say anything else is left, Jogi ji. There is a fourth point also. You note down. What will be the treatment, especially, sir? Virender ji, you also note down. What will be, and Ravi ji, you also, sir, all of you note down that what will be the treatment of this amount when you will be crediting in the P&L account, whether MAT will be applicable on it, minimum alternate tax under 115 JB, or whether it will be flushed out, it will be excoriated, it will be expunged, eschewed from considering the MAT liability in 115 JB. What is the answer on fourth issue? That tell me whether MAT will be liability will come. Courts have come on that also, sir. If something otherwise is not income, if something is fully capital receipt, it should not come in MAT also. That is the latest order of the courts in the context of, and I'm telling you, very interesting judgment of the Karnataka High Court on this. One can note it down. Best Trading Limited 428 ITR 52. It is 428 ITR Best Trading. Honorable Karnataka High Court. Udupi comes in Karnataka, sir? Mysore?
Yes, sir. Yes, sir. Karnataka, sir.
You are in Karnataka zone?
Karnataka zone, sir. Yes, sir.
So my geography is also a little bit okay, I believe. So that's by that standard also. So I thought my geography is very poor, sir. 428 ITR 52 Best Trading. What is this landmark judgment of Karnataka High Court, sir? I am that because you are in Karnataka, I will have to explain it more. What is this judgment? I am telling you, Jogi ji, there is no other judgment and thinking of the court on MAT like this, which Honorable Karnataka High Court has given us. Can you imagine what they have said? They have said that MAT liability will never arise unless revenue establishes that assessee has, what do you say now? What was the purpose of introduction of MAT? They went to purpose of introduction of MAT. That assessee is paying dividends in the company law and in the income tax law showing no profits. You know what was the edifice and foundation and the background and mischief and legislative intent behind introduction of MAT? There were some companies, sir, which were not paying normal, which were not showing income in the Virendraji in the normal income, but in the company's law they are having lot of book profit. Are you getting my point?
Yes.
That is where this book profit concept came in 115 JB. Now, Karnataka High Court in this latest order by the bench of Justice Alok Aradhe Saab, the sitting tax bench senior judge in the Honorable Karnataka High Court, has said that if this intent is not there in a case, then MAT liability will not arise. Can you see the radical thing? 428, I should repeat the citation. 428 idea. You will say, Mr. Goel, is it a right judgment? See, I'm nobody, I'm a very small man. My lords are very above me, sir. Rather, I believe if you compare Karnataka High Court judgment of best trading and you compare Supreme Court ruling in Aqua, then they are at both ways because both go by the principle of legislative intent first. And what Jogiji, the second point in best trading, while in the MAT, what judge said, you know what Karnataka High Court said? Karnataka High Court, it was a case of a capital gain where some deduction was otherwise allowable to the assessee in section 48 and capital gain head. But department was not giving in while computing business head, this MAT liability. So they went on to this extent that MAT has to be also on real income theory. Can you imagine this judgment of Karnataka High Court? You must, all of you must read the best trading judgment because it is in your jurisdiction landmark judgment, jurisdictional High Court order. But let me come to my point. My point is this, sir, what I was discussing, if there is a loan waiver, and see, loan waiver can be by financial institution, can be by individual. I am not on the lender's character or lender's capacity or status, legal status of lender. What is if it is a loan? If it is waived, then it is not chargeable to tax in the business head. It should not be chargeable to tax in the head other sources. And it should also not be taxable under minimum alternate tax. Somebody can say, see, I have already been saying, some people say have a problem on this, that something should be taxable somewhere. This is not the law which our income tax law follows, sir. And may I remind all my learned viewers, the law is let down by the Supreme Court on this aspect in 57 ITR, page number 532. You can note down this order also, sir. 57 ITR, page number 532. Jogiji, you note down 57 ITR 532. What it says, all receipts are not income and all income are not taxable income. This is the law which we follow. It is not the law that all receipts are income by default and all income are taxable income. Sorry. 57 ITR, page number 532, personality order, Supreme Court 3 judge bench decision. That is a leading foundation law. All receipts are not income, all income are not taxable income. Somebody say that some income which does not form part of chapter 3, that is excluded income, then it by default becomes taxable. I am sorry, this is the wrong notion. Are you getting my points? So let me take, I believe this query is clear to all of you for section 41 wala part. Case study. Now let me take another case study because now 56 to 10 has also come and 56 to 9 is there. And what I was discussing is, just a minute, sir. Section 41 we have discussed, sir, and section 43B we have discussed. Now, Jogiji, there is another provision in which lot of questions comes to us and judicial problems and interpretations are there. That is the what do you say, general or residuary provision of the business head in which expenditures are claimed. That is section 37. What it says, section 37 says ki, now one can have the section itself. It says, sir, any expenditure not being the expenditure of the nature described in section 30 to 36. Meaning thereby, if something is described in section 30 to 36, then you have to go by 30 to 36. Are you getting my point? 30 to 36 includes repairs, 30 to 36 includes depreciation, 30 to 36 includes specified deduction, you know, weighted deduction, etc. Are you noting my point? So any expenditure not being the expenditure of the nature described to in 30 to 36 and not being in the nature of capital expenditure or personal expenditure means it should not be capital expenditure, it should not be personal expenditure. Third, it should be laid out wholly and exclusively for the purposes of the business. It should not be capital. It should not be personal. It should be wholly and exclusively for the purpose of business. Shall be allowed in computing the income under that business and profession. Now, there are two important explanations, Jogi ji, to this law. One should note. Explanation 1 says, for the removal of doubts, it is hereby declared that any expenditure incurred by an assessee for any purpose which is an offence or which is prohibited by law, expenditure incurred for any purpose which is an offence or which is prohibited by law shall not be deemed to have been incurred for the purpose of business and profession, and no deduction shall be made in respect of such expenditure. See, I am not boring you. I am reading for a purpose. Please be with me. Now, kindly take note of explanation 2 to this section 37. CSR expenditure wala explanation. I want to show some very glaring things. Compare explanation 1 to 37 with explanation 2 to 37. What explanation 2 says? For the removal of doubts, be alert. It is hereby declared that for purposes of subsection 1, any expenditure incurred by an assessee on the activities relating to corporate social responsibility referred to in section 135 of the Companies Act 2013 shall not be deemed to be an expenditure which is incurred by the assessee for the purpose of business or profession. Can you notice any difference in, first my question is this, can you note any glaring difference in the language of explanation 1 to 37 and explanation 2? Any qualitative striking difference? The striking difference is this, sir, in the first part of this explanation 1, the law says, sir, Sabri Saran sir is rightly saying, yes, it is there, sir. Kindly take note of this. That first explanation says that an expenditure which you are incurring for a purpose, which is an offense, for a purpose which is an offense or for a purpose which is a prohibited purpose, then it shall never be allowed as expenditure, whatsoever the condition it is there. But in the next explanation, they say it will not be deemed to be the expenditure. It might be expenditure allowable if you prove it. Are you noting the point? Many of our friends believed, and I also believed some time back when this law came in, explanation 2 was coming, CSR expenditure law came in, sir. Finance Act 2014, you can note down. Finance number 2 Act 2014 with effect from 1st April 2015, explanation 2 came. Now, all of us started believing that CSR expenditure is per se to be treated as application of income only. It is not part of, application of income. So, I believe this is wrong. This is fallacious. And I am supported in my thinking by the Delhi High Court judgment in the case of Gas Authority of India Limited. Landmark judgment of Delhi High Court by Justice Muralidhar. Where he says this explanation 2 never says that this expenditure of CSR will never be allowable. Maybe in some cases, if assessee is able to discharge the owners that CSR expenditure is integrally connected with my business activities, then it will be allowed as expenditure, sir. Are you getting my point? And that is why I was showing the difference in two explanations to section 37. One can read it curiously. Explanation 1 and explanation 2. It's very interesting reading, sir. But on the other side, Jogiji, Bangalore bench and other benches in the country have now come on to this view that an expenditure of CSR, or what you say, layout, CSR layout, even though not allowable in section 37, but it can be allowed in section 80G, that deduction wala section. You can note down this view. This is now set. Initial view was taken by Bangalore benches. Now it is repeated. Bangalore bench decision is applied by Kolkata bench in JMS mining case. Kolkata bench in JMS mining case on 22nd July 2021. So this CSR expenditure is held to be allowable in 80G. I am also of the view, rather I am going a step further, sorry. Maybe somebody can explore it further, I believe. That can it be claimed in 37 itself even after explanation 2? That is my question poser. In my opinion, yes, I rely upon Gas Authority of India Limited. I rely upon the commentary of Mr. Arvind Kumar Datar, the senior advocate, the leading commentary on income tax published in June 2020. You can read that also, sir. So second question on explanation 1 and 2 is this. Explanation 1 is this, sir. Then I will come to main part. What do you say mean by an expenditure incurred for a prohibited purpose, an illegal purpose, or a offense purpose? Let us take a raw example, Jogi ji, if an assessee is there, businessman is there, his goods are going to be delivered to a buyer, customer, and he happens to jump the red light and challan happens. Whether it will be allowed as expenditure, you can note down all these things. Second, if overloading is done by the assessee or some kind of while transporting the goods, etc., some overloading is made, and then assessee is imposed some fines, etc. by the authority. What will be the character of that? Merely saying something as fine and penalty will make it not allowable as per explanation 1, or you will not go by the label, you will go by the substance of the transaction. You will not go by the label, sir. You will go by the substance. And in my examples, in my humble opinion, if while doing the normal trade, if you happen to make some innocuous violations, sir, then all those, this is, for example, in SEBI also, some listed companies are there, na? SEBI imposes fines at times. And there are consent fines, consent-based fines. So I believe the humble opinion in all these cases, SEBI wala fine and all this red light challan wala fine, overloading wala point, I believe they are allowable as business expenditure. They are not hit by explanation 1 to 37. The idea, you can note down my reasoning. My single reasoning is this, that this law says explanation 1, assessee incurs an expenditure for the purpose which is an offense. So if the ultimate object is the offense, then it will apply. If the purpose is not to do an offense and it is innocuously done, then it should not be hit by the wordings of explanation 1. Are you getting my point?
Yes, sir.
So this is a very interesting issue, sir. And I'm of the opinion that sometimes the label is not important. You have to see the character of the payment. If it is compensatory in nature. See, there are two types of payments. One it is really in the nature of penalty, and one it is in the nature of compensation. So something is made in the nature of compensation will not be hit by explanation 1. I believe you are getting my point. Supposingly an assessee has done breach of contract. Let us take the example. And in that breach of contract, he has to pay the damages to the other party. Virendraji, will it be allowable or not?
Allowable, sir.
Yes, that is the point. And what will be the treatment of the damages in the hand of the person who will receive it?
Income.
Let us take where income? No, sir, it is not that easy. Sorry, you have given it lightly. See, expenditure part, you are right. You kindly come to now section 28. I am telling you a very interesting thing on this, so that this circle of damages is complete.
Okay.
Section 28, there was an amendment, sir, in section 28 in last some budgets, where it stated, sir,
It's a session of rights, I think.
sir, our sir is asking something. CSR spend is mandatory under Companies Act and is spent out of profits. Why is then explanation 2 to section 37(1) and say what it says? See, I will take the case of my learned sir. This he says that Mr. Goel, then what is the purpose of explanation 2? See, my understanding is this, which Delhi High Court has given in Gas Authority of India Limited case. That's sir explanation number 2. It is not a permanent what you say prescription or to no entry zone of that expenditure. There can be, sir, some cases where the expenditure of CSR, which the assessee has done, because supposingly an assessee is not maintaining the books. I told you, this is not book entry based, law. Supposingly an outlay which you are doing in the books and which you have already recorded in the books, and this you are treating is application of income, no points, no doubt. But the question is this, whether that CSR expenditure has nexus, integral nexus with the earning of income. That is the point I posed to you. I'm not saying all CSR expenditure will have nexus with the earning of business activities, but there can be some activity. Supposingly you are doing an activity expenditure in the CSR at the directions of the government. Are you getting my point, Jogiji? There can be that case. And Karnataka High Court, although not in the context of explanation 2. Sir, okay, but it is not still application of income, I'm telling you. If you want to read this, basically we are driven by this notion that if I am treating it as application of income in the books of accounts, then it is a closed zone. For me, it is not closed. For me, it has to be still seen whether it can qualify as under 37 if it is not capital in nature, if it is not personal in nature, if it is incurred wholly and exclusively for purpose of business. If all these three ingredients are there, then it will be allowed, to my humble opinion. Are you getting my point? And that is why I cited the ruling of Gas Authority of India Limited. And that is why I cited the difference in the language of the two, explanation 1 and explanation 2. And that is why I cited the judgments of Karnataka High Court also are there, where Karnataka High Court has gone so far now that you have to see, forget about Karnataka High Court. I'm telling a Supreme Court order to Sir Skuri, sir. But sir is asking this, sir, Sarib Sabari Shan, sir. There is a Supreme Court ruling in case of National Cooperative Corporation Limited. One must read it, sir. 427 ITR, page number 288. What it says, you note it down. 427 ITR 288, the department's argument in that case, I will discuss this order otherwise at some later time, but I'm telling you, this covers my issue that what is difference between application of income and what is the expenditure incurred wholly and exclusively for purpose of business. Are you getting my point? The difference between application of income, that is the stage when you have already earned the income and when you have done already expenditure, and the stage when you are incurring something, applying the something. There is a difference between the two stages, sir. Are you getting my point? So 427 ITR, page number 288, also academically you can read it. I will just come to this order later on. I was just saying section 28 on damages, compensation part.
Clause 2, sir. 28.2.
Sorry. What is no? Yes. You are right, sir. 28.2 E wala portion. E portion. Kindly, it is very interesting. 28.2 E. It says any compensation or other payment due to or received by any person by whatever name called at or in connection with the termination or modification of the contracts and terms and conditions relating to business. Now, this is that clause where this damages will be taxable in the hand of the, if it is in the due to any business contract termination or modification. Are you getting my point?
Yes.
But let us say that there is a receipt of the damage to the taxpayer due to delayed supply of plant and machinery. Which is your, supposingly you ordered to some business supplier, you have to get some plant and machinery. It was not supplied within the time, and the damages are liquidated damages. You know, is the phrase in the contract. LD is paid by the supplier to the assessee. What shall be the treatment of that LD? Whether it will be taxable here?
No, sir. It will be reduced from the cost.
No, sir. It is neither will be reduced from the cost to my mind, neither it will come here, because first take this clause. It says termination or modification. It is not my termination or modification of contract.
Okay.
Are you getting my point? That LD on delayed supply of plant and machinery does not come in termination word and modification word. Termination of terms and conditions of the contract. Modification of terms and conditions of the contract. Now, within the contract, there is an LD clause for delayed supply. Then it is a capital receipt held by the Supreme Court, non-chargeable to tax in the case of Saurashtra Cement Limited. Landmark order. Note down. Are you noting this order? The Saurashtra Cement Limited 305 ITR, 325 ITR. It's a landmark order, sir. And it is followed by Karnataka, Bangalore benches and various benches in the country, high courts. This is a path-breaking order. So I told, but Jogiji, let us recall. I said if a person who has paid this amount, for it is allowable business expenditure. That damages. Because it is a regular allowable business deduction and it is not hit by explanation 1 to 37. And in the hand of the recipient, if it is for delayed supply of plant and machinery, if it is not coming in that 28(2)E, then it is capital receipt non-chargeable to tax. Are you getting my point?
Yes, sir.
So this circle is complete. Now come to section 37 again. I believe what you say, what you mean by what expenditure? Let us take a case study, and this is my again one of the most important case study of today's seminar, sir. And Jogiji, I'm telling you, with due respect to various professionals and our revenue authorities are, we have a lot of confusion on this area surrounding this zone. Now let me pose you this issue. Very interesting issue. It will ignite all of your interest. Let us take the example of a truck booking agent. Now what a truck booking agent, Virendraji, does? Truck booking agent has no trucks of his own. He has truck owners whose trucks he facilitates and gets hired to the clients. That is the person whose goods are transported. Are you getting my point? There are three parties. One is truck booking agent, one is truck owner, and one is the client and customer and user. Now, what happens in this entire supply chain? You know what is the supply chain, na? In this supply chain, truck owner does not directly gets the payment from the client customer. What happens? The contract is entered into by the truck booking agent with the client, and the payment first comes into the bank coffers of the truck, booking agent, and truck booking agent then after keeping his commission and retention, his portion pays back to the truck owners. Now tell me, how will you present this in the profit and loss account of the truck booking agent? I am talking about truck booking agent. How will you present this entire transaction in the hands of the truck booking agent? whether you will start with the commission portion of him, or whether you will take the entire gross receipt which is coming in his bank account as his receipt and then claim debit what he is giving to truck owner. What accounting you will do?
Only the commission portion only will do it.
see, sir has written entire gross and then claim debit. There is a total, sir. And I'm telling you, Virendraji, if you do this, this is ideal, what you are saying. Then you will not get your kundli of 26 years will not match. You know, kundli, I'm sorry, I'm saying like this. That 26 years kundli, our janam kundlis are matched when we are married in our Hindus. So what happens is ki here kundli will not match, sir, with the 26 years. How will you reconcile it? Your case will come into scrutiny. You will have to explain it. And your TDS credit ka kya hoga? Are you getting my points?
Yes, sir.
See, now there is a very strict reconciliation mechanism in the technology, Section 285BA, See, there is one side, the reconciliation problem. The other side, Virendraji, the problem is this, that if what Sarib Saran sir is saying, that let us say we first include everything as my receipt in my credit side and then claim debit side, what is my outgoing. What is the problem that will have? Please note, Jogiji, it's a very interesting case study. In the scenario one, when you will credit entire money in the hand of the truck booking agent and its receipt and then claim the debit, what is going to truck owner. The problem which will arise here, Virendraji, is this, that revenue can say that this debit you are claiming as expenditure A, and then it has to be in compliance to 40A subsection 3 and 40A IA TDS etc. has to be there. Are you getting my point? Supposingly, if you include everything in the receipt and then you claim debit of the outgoing, then the revenue can say you are claiming the debit as an expenditure A. So you have to also fulfill 40 capital A subsection 3, that it should not be in cash mode or non-accounting channel mode. And then the
TDS
department can, sorry, what you are saying?
TDS provisions also it will hit.
Yes. So this is the dichotomy. And on the other side, if you will say net, which you were saying, Virendraji, now take and pose it there, then the problem of reconciliation and TDS credit will come. Kya
Yes.
kare, sir? This is a cash 22 position, sir. I'm telling, see, I have posed you, why I have posed you like this? Because the underlying case which I want to discuss is that from the perspective of computation of total income, please note now down my very serious point here now. From the perspective of computation of business income under the business head, how you have to start the computation of business income is the very important point. Are you noting my submission, sir? What should be the ideal starting point? And in that, you have to understand, I believe, threshold, you have to segregate. You have to segregate that portion of the receipt. You have to offload that. You have to deboard that, disembark that portion of the receipt, which you are receiving in a fiduciary capacity. You are receiving in the capacity of a trustee. You are receiving in the capacity of an intermediary. You are receiving in the capacity of a conduit. Are you noting my points? So the receipt, which is received by the assessee in its bank account, but does not belong to him, from day one, it is the receipt of somebody else. In my humble opinion, as far as first principle of law goes, it should not be included in receipts of the taxpayer. Are you getting my point, sir? We have a lot of judgments to support this, even from Supreme Court of India. And I am telling one of the my favorite orders of Supreme Court of India in case of T. J. Chandran. 406 ITR, page number 1. Rest you can extrapolate. 406 ITR, page number 1, Supreme Court of India, T. J. Chandran. That mere coming into the bank account of an assessee does not make the receipt as the income of the assessee or includable in the as a considerable as computing the income of the assessee. Are you getting my point? So Virendraji, you are technically correct to a point, to an extent, that you have to segregate those receipts while computing the business head income, which receipts are not the receipts owned by the assessee and which the assessee is receiving in a fiduciary capacity, in a conduit capacity, in an intermediary capacity, in a facilitator capacity. Are you getting my point?
Yes, sir.
Because otherwise the department can wrongly apply 40A3 and 40AIA to the outgoing, which is not the outgoing in the strict sense. Are you getting my point? So that is why I was discussing this concept in the case of truck booking agent. And there can be various examples like truck booking agents, sir. You know, in the economic cycle, we used to file so many. Sir is asking a question here. Our sir is asking. Yogi ji, sir this is, I believe, who sir is there? Sir is a very long query. He's asking. We can Kashinath Pawar. Can we take this query at the end, sir?
Yes, sir.
Okay. Because I will be slightly defocused. Sorry. Please bear with me, Pawar sahab. Please take this query at the end of the. I will take this query. Now, what I was discussing, that what should be the ideal receipt and what should be the ideal expenditure. Are you getting my point, sir? So that is how I explained it in the case of truck booking agent. But I need to mention one ruling which has slightly created some kind of, I should be what do you say, fair to the other side also, revenue side. There is a ruling of the Supreme Court, sir, which you all must read. My gurus Jogi ji, who used to taught me that in the ITAT and high courts, always used to tell me that you must read first those rulings which are against the assessee, which are revenue friendly, and then you should develop an art to distinguish them. Then only you can try to become a good lawyer. So that is a counsel. So what is this saying? The Supreme Court order I am mentioning is Shri Chaudhary Transport Company versus ITO. Shri Chaudhary Transport Company versus ITO, 426 ITR, page number 289. 426 ITR, page number 289. This is the Supreme Court order of 2020, sir. In context of 40A IA, transportation wala point. Now, Virender ji, this is a very interesting case of Shri Chaudhary Transport Company. Now, what happened? The assessee included everything in its receipt and claimed the outgoing as an expenditure. It became victim of 40A IA. Because revenue says, when you have shift, see what happens in this cycle. When the assessee truck booking agent gets the payment, TDS is deducted by the person, client. Now, department, sorry, with due respect, says again the TDS should be deducted when this payment is passed on to the truck owner. Under 194 capital C. And if it is not done, 40A IA will follow like a shadow. Is it right? The Supreme Court says yes, they are right. Supreme Court has approved the stand of the Income Tax Department in Shri Chaudhary Transport Company, 426 ITR 289. So the impact of wrong presentation can be, Virenderji, very serious, which you said in the, which you also acknowledged my point. Now you can get the sense of my submission. Yes, in this case, Shri Chaudhary Transport Company treated the entire receipt as its own receipt, which was belonging to the truck owners, and then claimed the expenditure as the truck owner. Then department was given a leverage to apply 40A IA for violation of TDS under 194 capital C. So, Jogi ji, it's a very dangerous road. And may I tell you very important thing, sir, with due respect. Now 40A IA is 30% of the expenditure is disallowed. How much expenditure is disallowed? 30%, not entire expenditure. But in my opinion, this law has to be again rationalized in the sense that if there is no revenue loss cost to the exchequer, that is, the person to whom it is paying, he has already recorded in his books of accounts. And the CA certificate in Form 26A is there, na? Form 26 capital A. That is already there, then no disallowance should take place. Are you getting my point? So you should always keep in mind that there is a window to go out of this 40A IA. If there is a person to whom you have made the payment, if you have not even deducted the tax, which you should have deducted, out to have deducted, but the concerned recipient has already included the sum in its income computation, then no disallowance will take place, is also 40A IA and section 201 saying. I hope you are getting my points. And there is a CA certificate also, I believe, if I'm wrongly not recalling, Form 26 capital A is there. So what we were discussing, yes, this expenditure versus receipt saga. I believe you have underscored my point that which receipt is the receipt of the assessee in the businessman's hand, in the business capacity, and which receipt is not. Are you getting my point, sir? Now on section 37, kindly take note of before I switch over to the other part of my discussion, Jogi ji. I was thinking I would be able to wind up by 1:15, but I think I will have to take. I'm going, my strike rate, see, I'm going like a test match player in England as we are playing. Sorry. Sorry, let me come back to my point. There is a Supreme Court ruling, sir, which I wanted to discuss, Jogi ji, and I'm telling each of one you who wants to have an academic taste of this flavor of this order. I am telling you what an order it is, sir. National Cooperative Corporation Limited, I told the citation is 427 ITR, page number 288. It treat to read an order. A lot of concepts will be cleared. Let me introduce the facts of this case because it is directly concerning my topic of business head taxation. The corporation, you know, this is a very big corporation, statutory corporation created under a law of the government, National Cooperative Corporation Limited. This is created under a statute. It's an incorporated body. Are you getting my point? Now, what they are doing, Virendraji, they are creating a motivation to the cooperative societies in objective of the government, Constitution of India. Now, in that process, Virendraji, they happen to receive, this organization happen to receive lot of funds in the form of grants.
Yes, sir.
And what they do, the incoming which comes to them, there is National Cooperative Corporation Limited, that is the taxpayer assessee. The incoming comes in the form of the grants. Now they distribute it further, sir. Please note my point. They distribute this grant in what forms? Sometimes they give the loans to the other cooperatives in the form of refundable grants and sometimes irretrievable grants. Are you getting? There are two disbursements. One is retrievable and one is non-retrievable. Have you noted it with you? These are the facts, core facts of the case. Now, what happened, Virendraji? This assessee happened to earn some interest on this money which was kept with the assessee for some time being. The interest was generated from the banks, etc. Are you getting my point? When the money was idle. And against that interest, what the assessee said, this interest which I have generated in the process and what income I have generated, it should be taxable in the head business head. It should not be taxable under the head other sources. 56 should not be applicable. 28 section should be applicable. Business head PGBP should apply. Chapter 4D should be applied. Chapter 4F should not apply. Now, what department said, very interestingly, you can note down. Department says that business head will not apply to this organization. We will tax this assessee under the head other sources. First dispute between the department and the assessee, and it took 40 years to settle. Supreme Court has taken sharp note of this point. 4 decades it took to settle this issue before the Apex Court in 2020 October. That what is the nature of this income under the head business head or under the head other sources head? Which interest they are generating from the activities? Are you getting my point, Virendraji?
Yes, sir.
So, what is the nature of the activities carried on by the assessee, whether it is business nature activity or whether it is other sources activity? Second question came up for the consideration and which was a bone of contention between the assessee and the department was this disbursement now, which I told you, when the disbursement was irretrievable, the assessee claimed it as expenditure under 37. Please note, take in a sharp point. What assessee says, Jogi ji, first it says that my head is business head. My income from the interest, etc. should be under the business head, PGBP head. And I should be allowed the deduction of the irretrievable grants, which I am further giving to the various beneficiaries. Can you understand? Department says no deduction will be allowed and we will be assessed under the head other sources. Please note these 2 points. These are generally arising in case of unregistered charitable societies cases. This is a very sharp, and while discussing this 2 issues, Supreme Court has discussed what is nature of a business activity. A, when an income falls in business head. B, and when an expenditure is called as allowable against the income and when it is application of income, which I was saying to my other friend. Jogi ji, entire analysis and Supreme Court allowed the appeal of National Cooperative Corporation on both these 2 issues. First, Supreme Court approved the assessee stand that yes, head of taxation will be business head and it will not be other sources head. That is, it will be section 28. That is, it will not be section 56. Are you noting this point? Number 1. Number 2, they said that the assessee, the irretrievable grant which they have given to the other beneficiary will be allowed as expenditure under section 37. And the reasoning of the Supreme Court, you will be very excited to note that Supreme Court says it is allowable expenditure under 37 because of concept of real income. Sir, please note this landmark point. Again, Supreme Court says entire income of the business head has to be computed on the rational principle of real income theory. Are you noting this submission? Real income theory. So National Cooperative Corporation Limited again brought to spotlight the concept of real income theory under business head of computation. While computing business income, Supreme Court said very clearly to Judge Bench, Justice Sanjay Kishan Kaul said, his lordship said, Justice Kaul is also a senior judge of the Supreme Court this time. He says in this order, his lordship has authored this order of National Cooperative Corporation. He says this is a real income theory which will apply. I am afraid, Jogi ji, while doing the tax audit, how many times we are, or while computing the business income, I'm sorry, how many times we keep in mind the concept of real income theory? I believe it is a fundamental principle. It cannot be jeopardized. It can be jeopardized, cannot be jeopardized, sir. You see, your High Court has even applied Karnataka High Court real income theory to MET in best trading case, which I told you. So I believe section and one more thing, one more judgment on section 37. I believe then I will come to the other aspects of my case, the other aspects of my discussion which are left out. One other judgment which the Supreme Court has given in the recent past, which will be helpful in various cases of business head. It is in the case of, I'm just telling the citation. Sorry, sir. I have noted somewhere. That is Shivraj Gupta. Please note the name of this case. It is very important case for business head. Shivraj Gupta, 425 ITR, page number 420. 425 ITR, page number 420, sir. Now, in this order is a 3-judge bench order of the Supreme Court, Shivraj Gupta's case. And the issue in this case, Yogiji, was very, very interesting case of business head. That supposedly you do lot of expenditures are done by the businessman, you know, and there the business wisdom is of the assessee. He feels that he has to incur it. But department sometimes make a second guess on the business wisdom of the assessee. Can they make a second guess? You note this issue. Can revenue make a second guess on the business wisdom of the assessee to incur an expenditure under the business head? 3-judge bench of the Supreme Court in 425 ITR, page number 420, after analyzing the entire conspectus and conundrum of the law, has come down to this conclusion that revenue has no business to make a second guess of the business wisdom of the assessee that why this expenditure is incurred. Yes, genuineness can be seen. Yes, wholly and exclusively for the purpose of business can be seen. Yes, it is not capital in nature can be seen. Yes, it is not personal in nature can be seen. But why you have incurred it and why you have felt it to be incurred cannot be dictated and hegemon. That is what Supreme Court of India in this path-breaking 3-judge bench order 425 ITR, page number 420, Shivraj Gupta has said, sir. And I believe this judgment has lot of very serious applicability, sir. There are hundreds of situations where business agreements are, business understandings sometimes are interdicted, sir, by the revenue authority, sir, with due respect. And that is not within the, and that is forbidden, that is prohibited, that is not allowed. Are you getting my point? Definitely, you can say, Mr. Goel, when general anti-avoidance rule has come, GAR has come. That is a different thing. Are you getting my point? GAR, I'm not discussing GAR. GAR is a special code. So I believe I have discussed this section 37 in fair detail with my friends, sir. And there are a lot of, see, this business head is a section in which you keep on speaking and speaking and speaking and speaking and speaking and speaking. It will never end. So I don't know how many clauses of the tax audit report I have covered, but I want to take 2 more things, sir, Jogiji. One is this clause relating to 40 capital A subsection 3. This is what I want to really touch upon, sir. You know, 40 capital A subsection 3, if you read, it says that an assessee has to incur the expenditure in a particular mode. And if it is not done in that particular accounting account pay check mode, what do you say? Then it will not be allowed. And there is a rule 6DD also, you know, rule 6DD, which says that there is an exception to 48 subsection 3. And in the specified circumstances in rule 6DD, taxpayer can even incur an expenditure in cash if they come within the 4 corners of rule 6DD of income tax rules. Now, I want to say one thing, sir. In the tax audit report, there is a clause which says that tax auditor has to pinpoint what is the amount of expenditure which is not admissible in 48(3). Are you noting my point? So then it is a judgment-based reporting. 40 capital A subsection 3, Yogiji, was inserted in rule this 1968, and it is explained in circular 6P of 1968. Circular number 6P of 1968, that the purpose of 48(3) is to check on tax avoidance, is to bring discipline, is to have the audit trail of the transaction. If I say in auditor language, to have audit trail, and to make the transaction identifiable, verifiable. That is written in circular number 6 capital P of 1968. Now, question moot point is this. Let me take a practical case study. You are doing a tax audit of an assessee who is into the business of purchase of sale of immovable properties, sir. Are you noting my point? And there, Yogi ji, what is happening? The assessee who is purchasing the immovable property, let us say it is an agricultural land. It is a stock in trade for him. Purchase is made by the real estate businessman of stock in trade, but in cash only. Because agriculturists who are selling the properties are insisting that we will not sell you, Baba, without cash. This happens or not? I believe even today there are various land sellers, especially in agricultural land, rural areas, where the lands are sold only on the condition that cash consideration will be paid by the buyer. Now, fact of the case study is this: assessee is purchasing a stock in trade, that is the land, which is a stock in trade for the assessee. And now, Yogi ji, what he is doing is, assessee is purchasing it, proper registry is done, sale deed is done, stamp duty is paid. You note down what I'm saying. These are very critical points. Sale deed is done, registered sale deed is done, and registered sale deed stamp duty is paid. Now, genuineness of transaction is not in doubt throughout. Registered sale deed is there, genuineness of transaction is not in doubt, and identity of the person who has purchased the property and the verification of the transaction is fully verified. But the payment paid by the assessee, the transaction does not come under Rule 6DD. Rule 6DD does not come to help of assessee. Now you tell me whether you will, as an auditor, you will say recommend it for disallowance under 40A3. That is the moot point. Assessee is a businessman, real estate business. He is purchasing the land in cash, not covered by Rule 6DD. Proper registered sale deed, etc. is there. Now, question is this: if Rule 6DD is not coming to the help of the assessee, whether the amount will be straightaway disallowed or not? Tell me, sir.
Yes, sir.
It will be disallowed.
It is allowed, sir.
Yes.
Absolutely no. Can you note down there are more than 12 decisions of the tribunal, and your Karnataka High Court has also come down that if the intent, see, again they have gone by the intent of the law behind 40A3. They have picked the circular number 6P 1968. They have said and exhorted and beseeched to the revenue authorities that if otherwise the transaction is genuine, if otherwise the identity of the payee is fully verified, and audit trail, you note down, audit trail is clear, transaction trail is clear, then 40A3 cannot be applied. This is a very sharp thinking. And I'm telling you, this is not the view of the only tribunal now. These are the views of the high courts. And including your own judicial high courts. And including many other high courts, sir. Kerala High Court also, I believe, somewhere is there. The underlying principle in all this decision, Yogi ji, circular number 6P 1968, that is the memorandum circular explaining insertion of 48 subsection 3, which has now allowed the courts to say that if there is commercial expediency and if the genuineness of expenditure is not in doubt, 48.3 will not be applicable. Have you noted it down, sir?
Yes, sir.
The another part of the case study which I wanted to discuss is on section 14 capital A. You know, there is a clause in the tax audit report also where you have to recommend that what is the amount of expenditure not admissible in section 14A. Now, section 14A says that if an assessee has incurred an expenditure, sir, is based on the principle that if assessee is incurring an expenditure and that expenditure is for the purpose of earning the tax-free income, that is, which does not form part of total income, then assessee cannot claim that expenditure as allowable. Are you noting section 14A? Now I am discussing 14 capital A.
Yes, sir.
Now there has been so much of litigation on section 14A, sir. But I believe, Jogi ji, to cut short the thing and make it succinct, the principle which my learned friends can note down, which your Karnataka High Court through Justice Alok Arade Sahab has said in various last orders, and which various other high courts, our Delhi High Court, Bombay High Court have said, that if there is no dividend income, etc. earned in the year, there can be no disallowance under 14A. They have said that the contrary CBDT circular is ultra virus, it is unconstitutional. CBDT circular was there, sir, which says that even if there is no tax-free income earned, then also 14A section can be applied and Rule 80 can be applied. Virendraji, now courts have held, almost all high courts in the country have held, that section 14A to apply, it is sine qua non, that there is positive tax-free income earned by the assessee in the very year. Are you noting my point?
Yes.
An ultimate cap of the disallowance can be tax-free income only, and it cannot outcross the tax-free income. That is what Dr. Vineet Kothari, when he was lordship in Madras High Court, he also said in an order. Dr. Vineet Kothari, he was the judge of Madras High Court. Then he came to Karnataka. He came from Karnataka, and then he came to now in Gujarat High Court, Honorable Gujarat High Court. Now he said in this Madras High Court decision, sir, tax-free income is must A, and the disallowance under 14A cannot outgo cross tax-free income. In computing disallowance under 14A, you people need to note down, and you are all aware about it, sir. That section rule 80D is there, sir. Rule 80D gives the methodology of computation. Now, may I tell my friends, sometimes we have a confusion that substantive provision is bigger or rule is bigger. Rule is, sir, at a lower status, and act and substantive provision is a higher status. So if section 14A per se is not applicable, then rule 80D cannot be applied in a mechanical fashion. Are you noting my point? That is a settled law now. So we have discussed 40A subsection 3 also. We have discussed section 14A. We have discussed section 37. Now, what is left is there is one interesting clause in the tax audit report, sir. Share premium wala point. I want to discuss that. There is a clause, sir. Where it is asking in clause 29, sir. You can note down clause 29. Whether the assessee during the previous year received any consideration for issue of shares which exceeds the fair market value of the shares as referred to in 5627B. If yes, please furnish the details of the same. So it is asking about the premium aspect of the shares. So there is another theory now, Yogi ji, that if an assessee happens to issue the shares at the premium, then might be somebody can have a feeling that what can be the methodology of valuation. You all are aware the discounted cash flow method and net asset value method both can be followed. And it is the choice of the assessee. Bangalore bench has in so many decisions now your local judicial bench has said through Vasudevan Saab, Honorable Vice President, that in 5627B, the option again of the valuation is at the assessee, whether to follow DCF method or whether to follow NAV method. Are you noting my point, sir? DCF
Yes.
method is discounted cash flow method and net asset value method is NAV. There is clause number 28. Jogiji, it's very interesting. There is a lot of litigation going on this. I'm telling you, it is even the litigation is going in the case of our Sonia Gandhi madam and Rahul Gandhi ji. And I'm telling you, you will recall now, it says this clause 28 says whether during the previous year the assessee has received any property being share of a company, not being a company in which public are substantially interested, without consideration or for inadequate consideration as referred to in 5627A, please furnish the details of the same. In this clause, there is a popular query across India, and this issue is still at a, I will say, nascent stage. The issue is this, Jogi ji. Supposingly you have a client who is a corporate company or a partnership firm. They are getting allotted some shares of the other company in which closely held company. Are you getting my? Let us say company A is getting the shares allotted of company B. Let us take the example. Yeah, company X is getting the share of company Y. Now, at the allotment stage, they are getting it at the face value at 10 rupees. Now, question is this, whether this section 5627A is applicable when the shares are allotted in the first instance to an assessee, or to say in other words, this section can be held to be applicable only when you are one person is transferring the shares already allotted to other person. There are two transactions, a primary transaction and secondary transaction. My question is this, when a company or an assessee is getting a fresh allotment, whether section is applicable at the first place itself, whether you can say that it is the receipt of the shares in the hands of the assessee, or you will say in other words that receipt happens, Mr. Goel, within the meaning of this law, only when the shares are transferred from one person to the another person in a secondary transaction. Now, let me tell you, when this law was overhauled in 2010, it was an intent that has to be some transfer of shares, sir. The word receipt connotes transfer. But later on, Jogiji, when this issue came in the case of this, our other cases, high profile cases, CBDT came out with a circular ki no, it will apply to fresh allotment also. In much later when the law was already introduced. So this is a very, very tricky issue even pending today. That 56(2)(7)(a) per se will apply to the fresh allotment or not. My humble answer on the basis of legislative intent when it was introduced is no, it will never be applicable. It will only apply when a shares already allotted are transferred from one person to other person, sir. And for this, I heavily rely upon the memorandum circular when this law was originally inserted and recasted in the law book. That is in 2010 somewhere. And later circular introduced by the board with due respect are not valid in law, are unconstitutional according to me. Are you getting my point? There has been one case of Karnataka High Court, you can note down, which has come in the case of Karnataka High Court in the case of this famous man of Infosys, Rajan Pai Saab. You know this name of gentleman, he's a very famous personality, celebrity, Rajan Pai. In his case, the facts of bonus shares or some other, what is the bonus shares, if I'm rightly recalling. Bangalore bench was in favor of assessing that 56(2)(7)(a) will not apply on bonus shares. Karnataka High Court, Justice Alok Rade's bench has also upheld that Bangalore bench order. So I believe I have fairly discussed these clauses of the tax audit report with the jurisprudence in hand. And there is already endless, which we can now, if you have some other issues. There is one more thing, Jogiji, one can note down. Clause number 17. It's very interesting also. Clause 17 of tax audit report, where 43CA and 50C wala section are covered. Where it says clause 17, where any land or building or both is transferred. Now, Karnataka High Court, in one of the latest orders, I am telling my friend, sir, has said that this section 50C and for that matter 43C and 56 will not apply to rights in land and building. Are you noting my point, sir? Karnataka High Court has said that 50C, you can note down the citation of this landmark order of Karnataka High Court. And this concerns clause 17 of my tax audit reports also, sir. That is 432 ITR, page number 330, Karnataka High Court. 432 ITR, page number 330. What can be the, what is the import of the word land, building or both? Whether it includes rights in land and building or not, the answer is no. That is Karnataka High Court 432 ITR, page number 330. So, sir, we can now take the queries. Already it is 1:20. And whatever my friends want to discuss with me, and if I know, I will be very happy to share my thoughts on that. And thank you all of you for inviting me to this seminar. And I feel convey my humble gratitude to all my learned audience and Honorable Additional Commissioner, sir, all the participants and dignitaries and distinguished friends, sir. Thank you all of you. Thank you all of you from core of my heart, sir.
Sir, there are a few questions, sir.
Isn't
the objective of section 44AB is to establish a measure to curb tax evasion? Is the question from Subaration, sir.
See, it is not strictly tax evasion, sir, there. It is to facilitate the assessment, right assessment. It is to give a first-hand assistance to the administration and the AO when the assessment will be made. That is, sir, my case, sir.
Doesn't section 141A expect the SSC to use the same method of accounting? Just a minute.
I have discussed it. This is Madras High Court, and honorable commentaries are saying you can always follow independently cash system in the income tax law. Even foreign companies can follow cash accounting. That is, the judgments have come.
Okay. In case of a partnership firm, wherein a firm has a constructed, there is a one questions in chat box, sir. It's a lengthy question.
Can you read it for me, sir?
Yeah. In case of partnership firm, wherein a firm has constructed building and one of the partner has directly spent rupees 50 lakhs through his bank account towards construction, and in the books of the firm, the same has been shown as unsecured loan from a partner, and under the asset side, building amount has been shown.
I guided my point, sir. It is asking a question whether on journal entry section 269 as assess penalty etc. will. This is the question, na?
Yeah, 271D is whether it is applicable. He's asking something.
Journal entries it will not have.
Yes, sir. It will not. You can note down your Bangalore bench ITD latest order. Gopal S. Pandit. Bangalore bench of ITAT, Gopal as Pandit. The order date is 22nd October 2020, sir. Gopal as Pandit. The date of Bangalore bench of ITT order is 21st October 2020, sir. And there the Honorable Bangalore bench of ITAT, following other various High Court decisions, sir, has said that on the journal entry transaction, the 269 SS violation is not attracted, sir. Are you noting my point, sir?
Yes, sir.
Yes.
And if you want to note down the there is a Delhi High Court order on this, sir, also, which has been latest followed by circular also CBDT. And in this case, they have followed one other Bangalore bench order in case of Srimati Deepika versus additional CIT. You can note down second judgment of Bangalore bench. That is Srimati Deepika versus Additional Commissioner of Income Tax. That is dated 13th October 2017. And this judgment is in turn based on Ms. Deepika's judgment based on various High Court orders, sir. And otherwise also, I feel in my understanding of the law, there has been various High Court decisions, another High Court decision also, that payments, that general entry transaction should not come within the purview of 269 cap SS and 271D.
CSS spend is mandatory under Companies Act and is spent out of profits already taxed. Why is then explanation 2 to section
I've touched it.
Already answered. Doesn't exemption for cash payment for freight still exist?
Sorry.
Exemption for cash payment for freight still doesn't exist. He is asking.
See, there is a rule. See, as such, I am not aware about this. 48.3 has a very long list of exception in Rule 6DD, Jogiji. One has to consult that Rule 6DD, then you have to find out where you are placed. Then only you will be able to know. But I am on a more broader point I have given you, na, that if the genuineness of transaction is not in doubt and audit trail is clear and the person to whom the payment is going is confirming. I discussed in other seminar. I said, let us take a case here. Supposingly, the person to whom you are making the payment in cash and you are not making prescribed mode, but you are deducting the tax and that person's 26 years is showing this. That person means recipient 26 years. Then I believe it is out of disallowance. As per circular number 6P 1960. Are you getting? This is my humble viewpoint.
Sure, that is the only question. We don't have any other questions, sir. Whether you have received any other questions, sir, directly to your chat box, no, right?
No, I have no. Whatever are there, you have whatever discussed. I believe same are with me only.
Sure, sir. Sure. Yeah. Yes, sir. Thank you, sir. Thank you for enlightening the members with the litigation issues related to tax audit. We had a wonderful sessions. Now I request Virendra Kumar sir for the vote of thanks, sir. Virendra sir, are you there?
Yes, I am here, sir.
Yes,
Good
sir.
afternoon. Yes, a warm welcome. Respected CA Girish, Additional Commissioner of Income Tax, Mysore, respected Chairman of Udupi branch and Mysore branch, and also the managing committees of respective branches, and also the convener of Shumaga CP chapter, and the more particular, the speaker of the today's seminar, CA Kapil Goel ji from New Delhi. My colleague members, delegates, and students. It's my privilege to propose a vote of thanks on this virtual seminar. First of all, I would like to thank CAC Kapil Goel ji, sir, speaker of today's seminar on tax audit and its jurisprudence, for giving their valuable time and sharing their knowledge. It's our privilege that we heard a beautiful presentation and got ourselves enlightened on various aspects of tax audit and legal from one of the extraordinary, eminent, and authoritative person on the income tax subject from the personality Sri Kapil Goel sir. We are very much thankful that we were passionate and we were fortunate to have he's one of our speaker in today's webinar, and we request that in future also, sir, to give some time to our Karnataka to have some this type of legal jurisprudence, so that we will enlighten from your knowledge, and also we also will be able to present the cases in a factual manner. I thank Master of Ceremony CA President Jogi sir for extending his valuable support regarding arrangement of the entire program of today's webinar on Cisco WebEx. I extend my thanks to all the participants and technicians without whom this seminar will be successful. Thank you, one and all. Thank you, sir. Thank you very much.
Thank you, sir. Thank you so much.
May God bless everyone, sir. Stay safe and stay happy, sir. Bye-bye.
Yes.
Thank you, sir. Thank you.